Good morning, everybody. It is, what day is it? This is funny because I should know the day. It is Wednesday, January 1st. We've made it. Or February 1st, I'm sorry. See, this is my problem, man. I don't care about dates and time, and that's why I'm always late to the party. February 1st, Wednesday, it's rate hike day. I'm going to be listening to the FOMC news at Unusual Whales as usual. They're always right on it. They're on the ball. They got the best news. They're very reliable. Absolutely love what they've done for the community. So I will be at the space call there on Twitter. So it's going to be awesome. It's predicted that the rate hikes are going to be 0.25, which was predicted a while ago. Jay Powell was talking about easing interest rate hikes due to easing inflation. But I'm curious because eggs are expensive. Gas prices are still up. Now they're having issues with corn. There's commodity issues coming up. Corn shortage. It just doesn't look good. And then the White House is consistently tweeting on Biden's profile about how great the economy is and everything. And I'm like, no, it's not. The economy sucks, and people are starting to withdraw. Consumer credit use has gone through the roof. Like, people are racking up a lot of debt. Me personally, even though I have money, right? I make a lot of money. I have been eating, like, I've been making more rice lately. I'm not going out. Okay, I lied. I did order a Mr. Beast burger last night to try it out. I got a Nashville chicken sandwich and their loaded fries. Bro. Oh, man. So shout out to Mr. Beast Burger crew in Albuquerque. Man, that was amazing. It was absolutely incredible. I've never had the chicken sandwich, the breading was so crisp and delicious, and the chicken breast was juicy. It was like a whole breast. It wasn't all dried out and overcooked and just been frozen for however long. And the crinkle cut fries, they're actually crisp. What a concept. Five Guys, and where else did I get fries the other day? I can't remember where it was, but I was like, why are your guys' fries always soggy and sloppy and disgusting? And you pay like $6 for a bag of wet, soaked grease fries. Five Guys and some other place did it. I can't remember who makes the fries that Wingstop, man. The fries are disgusting. They are disgusting. They're not crisp. You get limp noodle wet, just disgusting grease-soaked fries that taste like they've been cooked in week-old, like month-old oil. It's disgusting. Anyways, rant. Good job, Mr. Beast Burger. I got Mr. Beast Burger because the Hellbiz CEO has just signed a deal where Hellbiz Kitchen is going to be working with Mr. Beast Burger, so that's really good. And now, something really cool, and I almost forgot to talk about this, the CEOs of GNS and Hellbiz are both talking about blockchain-based dividends on Twitter. Salvatore Paglia, I hope I'm saying that right. I need to go make sure I'm pronouncing that properly. Retweeted Roger James Hamilton. Top 5 things. Number 2, blockchain-based dividends force brokers to have to cover and clear counterfeit shares or be exposed. How many times did we scream this at the top of our lungs to Adam Aaron? And the reason it wasn't done wasn't because we couldn't work around legal issues, this or that. AMC's got every legal lawyer processor we need, and plus an entire community behind it. The reason it didn't happen is because Adam Aaron didn't want to do it. He didn't want to cause a short squeeze. He wants the company to remain stable, and he wants a seat at the table so that the bankers and creditors like Credit Suisse, JP Morgan, all the guys he thanked the other day who do own our debt, don't say, yeah, we will never give you lines of credit again. We'll never capitalize you again. AMC will go bankrupt. And they tried to do that to Elon Musk. They literally forced Elon Musk to succeed to the SEC years ago. Or the bank said, we will not capitalize you. We will not fund you. We will give you no cash flow, right? So Musk had to do it, took the hit, and then he worked his workaround. But Musk owned the company, right? That was Musk's company. AMC is not CEO Adam's company. He's a hired CEO. So he's not going to put his entire career at risk for, and I'm sorry, you know, people in this chat and a lot of people we work with are really good people. But if you go to Twitter and see some of the apes that are out there, they are absolutely vile people. They are vile. The clowns in Ape Radio, once again, I always have to go back to them. They are the perfect example of why CEO Adam said, I've got to get these retail shareholders off my back, man. And the whole time, We're so worried about the bad guys that we became the bad guys. We didn't let Adam Aaron raise capital. We voted down every single thing he wanted to do. Now, I'm not a fan of dilution, obviously, but if we would have let him dilute at $30 back when it was still above $30, he could have put another million in cash, another billion in cash in the bank. AMC would have cleared Q4 with $1.8 billion still in cash and a huge Q4 coming up. I mean, Avatar's ripping, and even Puss in Boots is over $200 million. That was a great movie, by the way. Me and my kid went and seen it. But the important thing is did Adam Aaron kind of work around us and screw us? Yes, he did. Yes, he did. The reverse split dilution that's coming up is probably going to be voted. Yes, it's probably going to pass because there's a lot of institution holding shares of AMC and APE. Plus, the APEs do not have the continuity to go out and vote. You'll see everybody on Twitter that's active go out and vote, but that's only like 1,500 people. The rest of the community, maybe some Redditors and whatnot, but the rest of the community and the people who own shares in their IRA probably won't even get a proxy. So I'm playing it like the vote's going to pass. I do not like what Adam Aaron did, but looking at it and looking at the apes and looking at his situation, he had no choice. He literally, if he couldn't do T0, which it doesn't make any sense. If you're a CEO and you're like, oh, here's a really good legal idea that I can use to expose naked short selling, and he didn't do it, it's either A, he's not for us, or B, somebody came in, twisted his arm, and said, hey, you're not going to do this or we're going to end you, right? That's just what it is. And at one point in time in the earnings call, he even said, he goes, if I'm getting threats in my DM and this and that, obviously not from any retail investor. It's obviously going to be from some Wall Street schmuck who's short AMC and is threatening Adam Aaron under the Fox account of an ape and a profile picture. And that's another problem with the AMC community, man. I know people want to protect their identities, but look, you can't be taken seriously and come into a chat and have a logical conversation with someone that's got a picture of an ape in their profile when there's hundreds of them out there and you cannot separate who has bad intentions and who has good intentions. The community fell apart because of that. There's too many bad actors out there. Like Sal Meme Lord. The guy's an absolute joke. He's a meme artist who came in and was working with Citadel Air, who the Citadel Air guy you can find on Twitter was actually arrested by the FBI. He dressed up as a police officer in Hampton, Virginia, and then entered a home under the guise of a police officer with one of his friends. And the only person home was like this 13-year-old boy. So they dressed up as officers. They broke and enter. They put a minor at risk. They walked around the house, took a bunch of stuff, and they were running huge scams in Hampton. The FBI was after this dude. And that's Citadel Air. That people listen to that guy, and he's a known felon. And people are like, "Oh, this guy's funny. This is a community leader." It's insane. It's absolutely insane. Anyways, get to some charting here. AMC popped up again, 565. It broke 550. That is great. I love it. I want AMC to go up further. I would love to see AMC at $10 because it furthers the arbitrage gap. APE is holding up on the center line of the bull flag still. So now we got to readjust. It did break out. It tried to go for another run, but we have FOMC and rate hikes today. So we're going to adjust our new bull flag line. Bull flags can run for weeks, guys, but it is actually waving. It's flagging beautifully. I absolutely love it. And all of our charting is lining up perfect on it. I'm expecting a major ape breakout to happen soon. And I'm not telling you to buy it. It's not financial advice, blah, blah, blah. I'm already into the max. I am loaded on ape. I've got almost 20,000 shares. My new cost average is $1.90, so I'm pushing it a little bit, but I am up 7,000 or well 6,800 today in the green, so I can take the risk. But look at this. We are still bull flagging like freaking crazy. Hey, do my trend lines. Okay, that's an old trend line. So we did break. We broke out, and then we came below. Then we came back to the center line of the bull flag. We broke out of our trend line. And now we've come back under it, and it's going to attempt to try to go again, and it's probably going to do it today. If FOMC, if the rate hike is easy today, and APE's not really too affected by it, but it is because of AMC in the ETFs and whatnot, in the funds, in the indexes. then you might see a little drop on APE. If we break below this flag, it's okay as long as we stay above these levels, like right, y'all, 235, 230, 230. If we maintain 230, we're all good, and it'll keep waving. So we're going to continue our flag out. I'm going to readjust this trend line because we have moved on, and it's right there with the flag. Wow, dude. That's like synchronicity. That's like perfect synchronicity. When something like that happens, I get pretty excited. Not that it's any indicator or factor that something's going to run, but look at how perfectly this bull flag is laying out. Everything's lining up beautifully on it. So anyways, that's where we sit with APE. I think we're going to have a breakout depending on FOMC, rate hike. If it's bad, we'll see a little downside on everything. If it's good, everything will pop. It looks like this morning, everything's a little red because people are worried about FOMC. Now, I was telling people earlier, if WISA, I'm in WISA, I'm following this because they did a 1-to-100 reverse split to meet listing requirements, which is super egregious. You went from 14 cents, 15 cents to $14.70. It had a little pop. I don't know what happened there. Maybe somebody bought shares so they could loan them out and short them. I don't know. But I tweeted today, I said, if WISA breaks 940, where's my tweet? Then there's going to be blood in the water, and we did. I think, yeah, if WISA breaks below 940, there's going to be blood. 101 reverse split, absolutely insane. I bet there's probably a capital raise on the way. They're going to start talking about raising capital. If they don't, after a 1-to-100 reverse split, if they don't raise capital, that's crazy for a company to do that and just let their stock float around. Like today, I think, what was it? The motorsport company, Motorsport Games, had a short squeeze, $250 to $81, and they immediately dropped like crazy. And I think it was on the back of them saying they wanted to raise capital on it. So, you know, this sucks. I wish I would have got into this play 2 days ago or had it on my radar. I don't know if anybody told me about it. I didn't get any tips. But holy crap, man, $250 to $81, that's an AMC move. That's exactly what AMC did in a longer time frame. But we got halted on January 21st. But it's good to see stocks like this moving properly and squeezing out when the time is right. And it's perfect because I think the market is starting to work more correctly in that when stocks do squeeze, the micro caps that had naked shorts on them, they're actually being covered and taken care of by these institutions. I think they're unwinding the market. I think we're going to see some play on AMC and APE here pretty soon. I mean, look at, you know, I'm not really charting AMC. That's not good. There's a huge daily chart descending wedge on AMC for over 2 years. It's huge, and it's getting to a pinch point. It's getting to a break point. It looks like it's trying to break out of that descending wedge today. If it does, it's going to be pretty great. I want to see AMC go back to $9.10, which was the height of our last push with DRS before all the clowns started fudding it out again. If we can get AMC back to $9.10 and APE maintains 230 or follows it, I am going to be so ecstatic. I'm going to make so much money. It's going to be crazy. And it's going to be well-deserved too. I will actually be completely positive on the entire play over 2 years in a very good way. So I'm hoping for AMC breakout. APE's strong. Man, APE is strong. And we need to just do that right. Strong. I'm going to get to some chats here in a sec, guys. Just unloading my thoughts. If you can't tell, I just get up here and unload my thoughts in a giant ramble. APE is strong. Seed is strong. Okay, what's going on in the chat? Morning, Jared E. What's going on, man? Ed Bonet, GM. Chris F. Yo, Spence, what's good today? Take a freaking look at. Yeah, I know. I saw MSGM. Man, it's crazy, man. I wish I would have got into that one. I don't think anybody told me about it. I didn't get any tips, but we did have people in the community that did get in. I hope they got out and made a ton of money. INPX 5-year chart. INPX. Never heard of that. X. I don't know what's going on. It looks awful. I mean, those prices like that, when you see that, it's probably, I doubt it. It's probably some type of charting issue. What is INPX anyway? Some type of charting, reverse splits and whatnot. Palo Alto, California. Design reactor genetic. Contact. What do they do? Indoor intelligence company. Time location system. Pixon. Indoor maps, data, indoor intelligence, smart, innovative, and hybrid workspaces. Oh, yeah, that's pretty neat. There's a reason they're at $1 though. Doesn't look very good. What's going on in short term though? What's the short interest on it? Check short interest. 2.53%. I don't know. I wouldn't touch it. Not for me. If it runs like crazy, good luck, man. It doesn't look good to me. I sold 2/3 of my AMC and bought more. Abe took a chance at it, paid out. All right, man. Good for you. Are you still holding? If you want, I don't know if you're on Twitter or not, or if you want to drop it in the chat. If you want me to let you know your threshold for conversion ratio, I have my calculator up. I just need to know your total amount of shares, your quantity, and your cost average on them. My name is Jeff Manning, aka Prometheus. What's up, dude? I am real. It's good to know, man. I get attacked by all these dipshits all day long on Twitter. These Ape Radio clowns, they go out and they make secondary and third profiles, and then you got Marantz Rants out there who's a complete freaking goober, man. The dude's just a mouth breather to the max. Hey, everybody. My name's Marantz Rants. What's that Spencer guy doing? You guy's a fucking moron. Excuse my language, but I'm so tired of it. I'm tired of Marantz, Ape Radio, and all these idiots out trying to smear me. What's funny is I just keep getting more and more followers, and then they get mad because their little GameStop professional, Mr. GameStop affiliate channel is just sucks. It's lame. Anyways, positive energy today. Again, rate hike coming up. We're going to get news soon. Let me check unusual whales. And I can't find their post for the space call. Central banks bought the most gold since 1967. That's crazy, man. All Hycroft Mine needs to do, Diane Garrett comes out and says, hey, we're restarting mining. That's it. I'm telling you, man. I'm waiting on that one. I am waiting on that one. And it looks like it bounced 44, which is the intra-month, I guess, intra-time frame low. So it's just bouncing around there. Let's fix our charting on Hycroft. Let's see what's going on here. Because I'll tell you what, if Hycroft doesn't pop, if Ape does its thing and I make a ton of money, and Hycroft is still sitting here by March, which is really close to the winter months getting ready to start to end, which is when you really start mining. I don't know the details of Nevada, if they have like permafrost situations or what, but we're in this channel. We're in this big channel from 44 to $1.51, and it had a little bit of a bullish run here. If it continues to kind of pop on this line, it can stay on this trend line, and I know I need 3 points. I mean, technically there is 3 there because we're on the daily. If it can stay on this trend line and work its way back up to $1, that would be great, because it will have listing requirement issues if they're not already there. So they're going to have to do something to get this above $1, which would be perfect if Adam Aaron decided to come in and buy another 30 million shares of it at 66 cents and lower AMC's cost average. That'd be phenomenal. Okay, Ed, I got you. Let me pull this up. This calculator is helping me know exactly when to sell, because it's telling me my threshold, and it calculates in my proprietary formula for what I think the dilution ratio is going to be based on price and total amount of shares. So, but from what I've seen, my buddy Ethan made another calculator on what the price will be post dilution based on market cap, and it was correct, and it was nice, and it lined right up with what I had. So I did have a bit of peer review on this. Okay, so 1900 AMC. Oops, I'm doing it in reverse. 1900 AMC at 6. Oh, dude, your cost averages are great. Dude, you're doing good, man. Yeah, 6,000. You have some of the best cost averages I've seen so far. The current prices are, APE is 544, AMC 237 for APE. AMC 5.44. I love that AMC is going up, man. And APE's hanging strong because that conversion ratio is going to pay off. Okay, so let me make sure this is all right. Post-conversion, you should have, after the reverse split and conversion, you'll have 600 shares of AMC from your APE allotment, and you'll have 190 from your AMC allotment. Right now, if it converted right now, your total value pre-convert is $14,220. That's what your APE is worth right now. If it converted today at these exact prices, your APE would convert up to $18,168, so you'd have a gain. If you converted all your AMC right now at these prices, then the dilution factor would kick in because APE is cheaper and 1.8 times the float of AMC currently. Then your AMC would devalue down to $3,202. So you would gain a little bit off of your APE conversion with your new AMC shares, but you would lose a little on your legacy AMC shares. But that's right now. You're at a pretty good cost average. If AMC can go to $7, let's do the 910 scenario. Because I just like 910. It was a good point. We jumped last time. It's very possible AMC could go to 910. If AMC went to $9.10 before conversion, then your AMC would be valued at $17,290, right? So if your AMC converted reverse split through the conversion, you would lose value on your AMC. So if it ran to 910, I personally would take profit on my AMC at that level. And if APE was still at 237, I would flip half of that into new shares of APE, because if it converted, your APE converted is going to gain in value by 50%, which is great. But if you took $10,000 sold before conversion of your AMC, right? Let's say you sold all your AMC. Boom, boom. And you decided to buy another, my phone. $10,000 divided by 237. We'll just say 235. You could add another 4,300 shares, 4,255 shares, right? Oops. So you'd have 10,255. Come on. 1,255. Because there's going to be no change. There's going to be no leftovers, no decimal points, no fractional shares after this is done. So if you had that many shares and you bought them, your cost average would lower. Let's just say we brought your cost average down to $5 because you bought at 237. Then your APE, let's see, 10,255. Your APE value then, right before, say you did it right before conversion. AMC ran like crazy. You sold all your AMC at 10. You bought a bunch of new shares of APE the day before conversion at 237, lowered your cost average. Your new total value on APE would be 24,304, but post-conversion, you would be 51,945. So there you have it, you guys. There are multiple instances in this play where you can double your money very easily. Right now, I'm holding all my APE. I might buy more AMC calls if AMC holds these levels. I might reopen a call out longer, say past March. So if AMC does run like crazy, I'm going to make more money on that. I just sold one yesterday. I made $600 on an AMC call. But we'll see if I can't get AMC. If AMC does run to $9 and I miss it, all my APE is going to value up anyways, and I'm going to make a ton of money, man. So this is a really good situation for you guys. Like if you see AMC run and you hit your cost average and you have the potential to sell and get out clean and half down on APE and lower your cost average on APE and make more money on the conversion, you fix your bags, man. You fix your bags. But people are like, no, I'm just going to hold and see what happens. You're going to get diluted. Then you're going to get 10-to-1 reverse split. If your cost average is 20, you're going to have a $200 cost average. And then if APE is, or AMC and APE is, say $5, it's going to 50. You're now $200 on your cost average, but the stock price is 50. Then Adam Aaron comes out and says, we're going to dilute, we're going to raise capital with 25 million shares at $50 or $30 or whatever. Then the stock goes down again. And then shorts come in and beat the shit out of it. And now you're sitting at $20 with a $200 cost average. You guys got to fix your bags while you have the chance. Adam Aaron left the back door open to us, man. He did us a little dirty, but there's community has a bunch of poo flingers in it. Like I always say, flinging poo around the room, diarrhea of the mouth. People in different space calls who have no financial background whatsoever, have no education in accounting, have no experience in the market, are out there telling people how this is going to work. It's insane, man. I know it is confusing, but they don't even know how to read the filings. Ask them to read an 8K or to read a 14 or any of them, man. It's crazy. They have no clue what they're talking about, and people retweet them. There's a parody account you guys saw the other day I got in an argument with, and I'm like, you're intentionally misleading people as a troll on a parody account, and the apes are retweeting him like he's telling the truth because they're dumb, and they think that this guy is actually on their side, and he's really out there going, I promise AMC's going to 100, and then AMC dropped 6% that day at close. He said AMC's going to 100 today, mark my words, or it'll be up 10% today. Completely wrong. He's either a parody account misleading people purposely, or he's just a dude clout chasing that's just wrong, man. Anyways, calm down. WISA. About 20K all the way up from $1.90 and all the way back down. My AMC average $13.50. My APE cost is $140. Preparing to sell AMC at 6 and dump in APE. Yeah, I mean, like I said, man, I probably shouldn't have sold my call yesterday, but I did a Feb 17, so I need to get a new one out further past March. So if AMC does run like crazy, I'll have that call print for me. And then if APE doesn't follow, I take the tendies from my call and I buy more APE with it. It's going to be awesome. All right, I got to refresh. I got to check my stuff here. What's going on? Because I got puts open right now on SPY and Pfizer, which got absolutely ripped yesterday. They did something yesterday. Somebody said it was a theta gang something, where the theta just got ripped out. Even though my puts are way out, it doesn't matter because the puts that were in the money right here pre-market yesterday, there was over 100K puts in the money right here. They just ripped them out, man. They just absolutely destroyed them. But I will say, somebody took out a massive amount of puts on the QQQ. I think they think that the Fed meeting is not going to go well, but who knows? If the Fed meeting is decent and I see the market rally, I'll probably just close these puts because I got screwed on them. I was way in the money. I should have sold them the day before. I thought we were going to see more downside, and then they just manipulated the market like crazy. There was a big options chain manipulation in the market. All right. We need to find unusual whales space call so I can retweet it. They posted it earlier, and I'm not. Here's some news. 29 minutes ago. If Powell keeps hiking rates, he risks the entire financial stability of the global economic system. For Barry Sternlicht. Let's listen to inflation.
And since rents are falling, market rents are falling month to month, not year over year, month to month. They're going, this inflation has peaked. The biggest increase in last month and has remained is the renter equivalent number in the data, which was 0.8 positive. In reality, that was 0.34 negative. The lag in the housing data is completely distorting inflation. And since rents are falling, market rents are falling month to month, not year over year, month to month. They're going this way. You will see a negative number there, and it will look like energy. It'll come all the way down. So inflation will come down. And people who talk about keep raising rates, I hear these guys on your morning show, I want to strangle them. Volcker didn't have a $32 trillion deficit. So here's the actual interest number. The federal government spent the following amount of money the last 4 years on interest expense. In 2019, $375 billion, then $345, then $352, and last year $475 billion. So here were the average interest rates those years. They were 0.5 in 2020, 0.1 in 2021. That's the average. These are live. $1 trillion+
on interest.
And I agree too. I think they should have done a hard rate hike 2 months ago, like a 75 point, and then just been done and shocked the market back into straight. Who knows if Powell, I mean, there's a lot of people out there thinking, they say Powell's just going to do 0.25. If he does 0.50, it could shock the market and we see downside because there's a lot of bullish sentiment being priced into this. And look, here's today, the largest flow today, SPY puts 460. The puts at 460 for June 21 at a $9.7 million premium. Holy crap. QQQ put 275 2023 April 21st, 3 million premium. Somebody's betting big money that this market's going to go down. That's some big plays, you guys. So we'll see, man. I'm pretty anxious today, actually, because I mean, I'm long AMC and APE and all that. And I'm short. Again, the WISA. I've got puts on WISA because it's just a terrible thing they did with this 100-to-1 reverse split. They're lucky today that it tried to reclaim this support at 940. If it can't hold that, if it can't reclaim this and hold, this thing is going down. Bad. Like, it's going to go down. And I'm guessing easily 868 is probably somewhere this thing could go. And let's check the short interest on it right now. 5.8%. So there's room to come in and short this thing. Summit Semiconductor short. Wait. I don't think that's the right one. It's a ticker. WISA Technologies, WISA Technologies Inc. San Jose. Oh, yeah, here we go. 3 hours ago, I called it. I freaking called it, man. WISA Technologies announces pricing a 6.2 million registered direct offering and concurrent private placement. I fucking called it. I knew it. I mean, it's pretty obvious that when you're there, you... Oh, there it is. WISA Capital, WISA Direct Offering. Probably gonna see downside. If that's the correct WISA, I think. Yeah, I mean that's under their ticker. WISA Technologies announces registered offering. Webull, WISA Tech. Yep. They're going to come out. They're going to do a direct offer. They're going to do an offering. They're going to raise 6.4 million at the current share price. So that's not a huge dilution, but it is dilution. This is going to see downside. So we'll see. Who knows? Maybe I'm wrong. Maybe there's a short squeeze like there is in everything, which everything is squeezing. It's crazy. All right, back to unusual whales. On the damn space call. There's so many bots back on Twitter lately, man. I just want Ape to do a few push-ups, sit-ups, and drink plenty of juice. Yes! How many push-ups did he do? What kind of juice did he drink? Sounds like you're talking about Team 4-Star. Team 4-Star. I love Dragon Ball Z Abridged. So funny, man. Let's see. FOMC, there it is. Finally. Jeez. Retweet. What time? 12:55. It's 11:47. Okay, 12:55 Eastern time. Oh, it's soon. Pretty soon. Maybe I'll just hang out and stay on and we'll just listen to it live, man. We'll watch the market go crazy in the meantime. I'm gonna go get some water real quick. I'll be right back. How do puts pay out during a reverse split? No, I bought them after the reverse split. So there is an adjusted option on there. So basically, it would be like me buying puts at whatever it was, 14 cents, basically. Yeah, your bot was talking to me last night. How do puts pay out during... Oh, okay. Ape just melted faces. Did it? Ooh, yeah, breakout, baby. Told y'all. It's trying again. It's gonna keep trying, but it's hitting that bull flag, man. That thing just ripped. I'll just leave it right there. I gotta get some water real quick. Had to go let my doggy in too, man. He's out there sunbathing right now. Oh, Culligan Water Service. I love my water dispenser. It's absolutely amazing. Nice. Come on, Ape. Ape's my baby. AMC. That's great. Even with the pullback, this is great on AMC because we're having an event where AMC is steadily climbing very healthily, very organically. I'm loving it. I'm McLoving it. I'm going to drop a few short-term lines and just see where we go. That's a cup. It looks like a little cup and handle in my opinion. I mean, look at this. Peaked, cup, coming down, handle. Maybe AMC's about to pop. And our trends are showing up nicely. So there is a constriction right here showing in after hours. So that's good. Cup, forming a handle. Bing. I don't like 1, 2, 3, 4 day cup and handle. I mean, that's great. I want AMC to fly, man. Everybody's like, oh, you said sell AMC. I'm like, hey, that's not what I said. And that's all the mouth breathers and poo flingers out there. I didn't tell anybody to sell their AMC and buy APE. I said I'm buying APE because the ticker's called APE. Adam Aaron set it up so we could get out of this play properly. But you got to have the ability to put 1 + 1 and come up with 2. You have to be a multi-celled functioning brain, you know. You can't just, oh, I'm the host on APE Radio. I'm the one. The choice is yours. Ugh. Morons, man. They have misled so many people into catastrophe. And when these guys who are misleading people into still thinking you're going to get $100 for AMC, if it doesn't happen, they're just going to delete their Twitter accounts. They're going to walk away, and you never knew who they were. They have fake profile pictures. At least some of them have the guts to put a real profile picture up. Even if they hate me, I still respect them for being out front and center with their real profile picture and their real name. So there's that. But these guys that are misleading people for clout, man, holy crap. Somebody accused me and said I threw a fit because nobody wanted me on the board at AMC. I've got recordings of me going, I would never work on the board at AMC Theater. There's no way. I would immediately be the black sheep. The board members would be like, this guy is going to work for retail and mess up all our plans. It's a stupid idea. Dumb idea. It's just dumb what these people all come out with. Like, they keep coming out, they're like, yeah, Zom at $5. You had Zom at $5. Zom ran to over $2.85, $3. There was 100 people that had Zom at $5. Zom would have ran to $5, but the company came out and did a capital raise at over $3. We'll just go back to that ticker anyways. Let's just see where it's at anyways. So, it's having a little bit of a run right now. It's up 3%, 298, but they did huge raises. They did big dilution, which ruined the play, which is exactly what we're getting ready to experience right now. Me and my friends, let's see what time frame this was. Look at Zom hit 15 cents and ran to a 33 cents. I don't know if they did any splits or not. I'm not pumping this. I'm not telling you to buy the stock at all. But this is what we did. We were in Zom in the 10-cent range. My buddy was in at like 4 cents or some crap like that, and we started playing it. We sold on this pump, and then it ran to 290, and I sold, and then we bought again, and it ran back to 273, and we sold. And then anybody who didn't take profit carried bags on the way down, just like they did with AMC. So all these morons who are out there talking, oh, he was pumping Zom, he was pumping Zom. Everybody was talking about every stock. And if you followed my sell indicators, which I came out and talked about selling anyways, then you got out of the play and you made money. If you hold forever, then you risk bag holding. It's that simple. It is that simple. It's crazy. And the reason I got into Zom was because it was a Michigan company. My buddy called me and said, hey, man, this stock's pretty cool. It's a Michigan company, too. We got in and made a ton of money on it. I think I made over 20 grand on it, and I decided to sell and get out of the play. But everybody on Reddit was in the mindset of, ooh, you buy and hodl everything until it goes to $100. That's ignorant. Absolutely ignorant. Like Morantz, his GME position, if he even has one, is probably absolutely shit. I've never even seen his position. Like, I've never seen him post anything about his position. So, and like, I challenged the guys to Ape Radio the other day. Post your positions. They were talking shit saying I didn't have a good bank account. I posted my bank account and I posted my positions, and I'm fine. Believe me, I'm fine. But I said, post your AMC positions, and you watch, they'll post it. They'll have like 50 shares or some shit, which is totally fine. If you have 10, 50, I don't care how many shares you have or your situation. What I care about is when you're online talking crap as a financial pusher and a community leader and trying to run for clout, and you only got 10 shares, you just need to back off, because there's people with big money in this game. Motorsports game have a split. It's up big time. No, Motorsports games had a squeeze, had a short squeeze, and it sucks because I didn't get into it, right? I didn't hear about it until it was like already up like here or something, and then I decided that's too risky for me. If I would have bought in yesterday, which somebody told me yesterday, if I would have bought in at 23 or 10 or whatever it was, I could have rode it up to 81. That would have been great, but I'm all in on Ape. I'm not going to risk my Ape position for a gamble on a stock that I know nothing about. I wouldn't touch this with a 10-foot pole. I think they just said they were going to issue a capital raise too. So, but it's pretty impressive. WISA came back up above that trend line. Like I said, if it makes this the new support on a downtrend, it's not good. Like if it grabs support, I mean, that's not bad, but it's grabbing support at its old low. Let's see here. Let's drop some charting lines on this. I better pay attention because I'm actually in the play. Oh boy. And it's in a descent. It's in a falling wedge, right? Descending wedge. Doop, pow, falling. It looks like it's going to make a move here pretty soon. If it bounces this top resistance and comes back down, it's gonna fall, man. Either way, when they dilute, it's definitely gonna take some heat. They're gonna raise cash, but you're raising cash off the back of splitting 100 to 1 on a 14-cent stock. That's pretty criminal. That's criminal, man. That's nasty. So 245 resistance on Ape. Let's check. I tried to do a little breakout, man. Yeah, 246 right now is pretty healthy resistance. Yeah, right there. Look at, and it's an old resistance too. So that's we'll just say 246. We'll say 247, man. 246.5. So right there, but it's continuously still going. It's tracking up. It's doing higher lows. We had higher high, and then we had higher low, higher low, higher low, higher low, higher low, right? And if it breaks out of this bull flag to the upside, that'd be great. And it's probably just waiting for the FOMC meeting today, guys. That's, in my opinion, everybody's waiting on the FOMC meeting. Oh, let's go back to AMC. To me, that looks like a cup and handle. I mean, I might be wrong, but it's cup and handle, forming with a trend line going to the upside. I don't do any fractals. I don't do any, Fibonacci, none of that stuff. It's all great. I love everybody that does it. But honestly, I've been very successfully trading with just very basic indicators, MACD, RSI, basic charting. And I base all my entries and exit on the 5-minute RSI. If I see a stock is running like crazy and you see the RSI on the 5 minutes through the roof, then what you want to do is go check the 1 hour and 2 hour and see where the RSI is there. The 4 hour on AMC, the RSI looks good for a run. If we pop and you see the RSI come up to here on the 4 hour, say 80, 70, 80 again, then that means AMC could potentially see $6, $7 on its individual share price, which is great. AMC is set up to move to the upside. And as the arbitrage gets closer and closer, the prices should converge, but they should kind of step up because the value is coming back up. It's valuable to own the stock because you have the potential for arbitrage. And shorts in the game on AMC definitely want to be short AMC and long Ape, so they get all those new AMC shares at 66 cents. I'm in the stock WISA at 1450. Do you see it reaching 15? No, absolutely not. I have puts on WISA because they did a 100-to-1 reverse split. They had a little run to 1470, right? But this is the problem. Today, and I called it a couple days ago, they just announced they're going to raise capital. They just announced a capital raise. And just the simple fact that when you reverse split like that, it makes the stock really easy to short. It's crazy. So they're going to dilute, they're getting ready to dilute WISA. WISA Technologies Inc. WISA Technologies pricing of 6.2 million registered direct offering. Will expire 5 years from the issuance. Let's see here. They want to do 583,306 shares of common stock. What's the WISA float? Float 155.12K shares on WISA Technology as reported by Finance at Yahoo. So if that's true, let me go to Fidelity and check just to make sure. You're getting like a 3x dilution on the float. That's wild. Getting a 3.5x dilution on the float. It's not good. Not good at all. For a stock like that, that was at 14 cents and they reverse split it up to 14.50 and then they immediately do a cap. They're doing it for listing. I'm not blaming them. But if you're a swing trade meme stock pump investor, you probably can get your guts ripped out on that one. I might be wrong. Maybe it pumps. I don't know. Let's see. I'm just verifying the float here. Probably should refresh my page too. 500, yep. Okay, that's the volume. So it's trading a couple times its float and volume. Let's see. Oh, short percent as of January 13th, 195%. There's 1.37 million shares short on WISA. Ooh. The prior share short was 12 million. This can't be correct. It's only 0.28 days to cover. What is the float on this thing? But if it's 195% short, that's pretty wild. Analysis statement. Share short, 13.69K. This isn't right. Something's going on with my Fidelity. I don't think there's 190% short interest because everybody else is reporting that as of Jan 13, 2023, unless they just shorted the crap out of it, just like currently. But to me, it looks like an absolute flop. Like I'm definitely not long on it. I've got puts on it, and we'll see. Good luck to you if you are long on it. I hope you can get out, but man, I'm not. Definitely not touching that. I like you, bro, no homo, and I appreciate your help. But don't brag about AMC, and it's up to you to hold or sell. Okay, Sammy, I like you, bro, and I appreciate your help, but don't brag about selling AMC and buying AMC. It's up to you to hold or sell. I know you have a big heart, so I appreciate you, but you just told me not to brag about it, but then you told me it's up to me. I'm going to talk about AMC or APE any way I want, when I want, because it's my money. It's not your money. And I think you meant selling AMC and buying APE. So I'm going to say whatever I want on my channel, man. Appreciate you, but don't come in and tell me to censor myself. You can get out of here with that crap. I'm new to Twitter. How do I find Froggy on Twitter? Let me drop my my @ to you guys. Twitter is having issues with searching people, I've noticed lately. Like, I try to search people I followed for years, and I can't. Like, literally cannot find them. So I'm at @tspencer322. That's it. There is no other. I have no other Twitter accounts. That is it. There's people that have tried to impersonate me before, crypto scam artists and stuff. I will never ask you for money. I'll never ask you for anything. I'll never offer you crypto. None of that crap. What's your thoughts on AMLI? AMLI. Let's see. AMLI. America Lithium. Ooh, lithium. Ooh, lithium. I think Musk and Tesla is going to be the future of lithium. Nice looking chart. Let's see. Drop a trend from $1.30. Okay. So you got a great trend line over the period of, let's see, that's December 7th, right here, actually. November 30th, all the way till today, you have nothing but a solid uptrend on it. 30-minute RSI is low. 1 hour RSI it's medium. It's in the center anyways, you know. Daily RSI is pretty high, and you do have old charting potentials here. I don't know if there was any capital raises or not on this. You have resistance at $5. Man, I wish you'd have told me about this earlier. You have, there's got to be some type of news in between here and here. At this $5 point, what day was that? November 18th? How was the market on November 18th? Let's check the SPY. November 18th. So the SPY was down in a low, like it took a crap, right? So on November 18th, the market was in the gutter. Damn. I hope I didn't just lose my charting on that I just did. AMLI. Good, charting's still here. What I would tell you now is the daily RSI is pretty high. I wouldn't worry too much about that. Your 5-minute RSI is good all the way up to the 4-hour. I would tell you to look into the company, check their financials, see if they're producing. This is what I would do. AMLI. Oh, that's residential. Stop. American Lithium Corp. Let's see. Massive new North American lithium mine closer to reality with GM investment in Lithium America. Lithium is going to be the big push here. Tesla needs it. GM needs it. Ford needs it. Everybody needs lithium. American Lithium Corp. Let's go to their page. I don't see enough data on the thing. Here's their lithium projects. G corporate governance. Look at their board. Find out where they've worked in the past. Check their lithium projects out. Go through the filings. See what they're earning. See, this is great. I love investor relations pages like this. There's 204 million outstanding shares. 44.1 million warrants and options outstanding, 248 million shares fully diluted. There's 34 million in working capital as of January 1st. Let's see. And then what you want to do is go through their former earnings statements, see if they're producing, what are they making, what's their revenue, what's their debt. But it doesn't look bad, man. Like, if they start producing more lithium and they start bringing in like revenues, a stock at that price, and think of this, it already ran to 5 once. When this EV thing really kicks off, and GM and Ford are making EVs, that's just the bottom line. Tesla's making more EVs. You got Mullen, you got Lucid out there, right? So lithium's going to be huge. So this could be a really good play for if you want to hold it for 12 months, man. I think it's not bad at all. All YouTubers are the same, zero trust. Sammy, get the fuck out of here. Like, you are the people that are so incredibly annoying, man. It's just like, you guys come in, you tell me what to say, what not to say, and then you attack all the other YouTubers, whatever. I don't care if you like me or not. It's just annoying when people come in and say stuff in the chat that's anti-productive and negative and stupid. It's just annoying, so you can leave. There, now you're gone. Come into my chat and my YouTube and tell me that I can't talk about my AMC position. Bye. In your opinion, do you think APE will stay above $2? I think it will. I think APE will stay above $2, and that's how I'm playing my investment. Is I bought a lot more actually. I'm sorry. The other day when it came down here around 223, I bought a ton more APE because I think it come right off of my bottom and my charting, right? I was like, this might be the last time to buy it. I was hoping we'd see it at $1.90 again. Maybe the market explodes today. Maybe it absolutely takes a dump and APE comes down to $1.90. And if it does, I'll buy more because I know the arbitrage is there, man. You guys can say what you want in the chat, but don't come in and tell me what to say and be incredibly annoying and just anti-productive. I don't care for it. It's stupid. Tell me what to say because you're holding an AMC bag. That guy is holding an AMC bag because he listened to people on APE radio instead of coming here and playing arbitrage properly. And now he doesn't want me to talk about when I sell my AMC, which I sold a call option. It's so annoying, man. It's just so frustrating. And that is exactly why Adam Aaron wants us out of the play. He wants the retail investors to lose the power of the vote so he can effectively manage the company so it doesn't go bankrupt. That's exactly. Look, I respect him. I don't respect him for what he did to a lot of AMC shareholders and what he's going to do, but he doesn't have a choice, man. He has no choice. If we vote no on every single thing because we want to squeeze, the company can't raise capital and it'll go into bankruptcy, and then the shorts will come in and eat it alive. That's just the truth. That's exactly what will happen. Everybody's like, oh, no, it's going to run to $100. Oh, we've been waiting for that for 2 years, and guess what? Every single time somebody gets margin called or collateral called, FINRA waives it. Then they get off the hook. They take away the buy button. They FTD. They have 25 low up, low down halts on days where they're not even supposed to be halted. You guys got to understand, we're not just playing against shorts. We're playing against all the regulators too. And Adam Aaron knows that we're not going to win that battle. He can't let the AMC go bankrupt because if he does, then everybody's pensions who has AMC in it, they're wiped out. They're wiped out. So the apes need to start thinking a little more broader. There's working people out there right now that have AMC in their pension plans. And if we let it go bankrupt, we're screwed. But you had the opportunity to play arbitrage to fix your AMC bags. And if you didn't, that is your fault. I have a couple thousand APE, 142. Bill Ferguson, the play is buy both. Your play is buy both. That is your play. I have a couple thousand APE, 142. I can't buy any more. Yeah, you guys, don't invest more than you can't handle. Like, don't go outside of your stuff, man. Like, be responsible with your money. Most people have held their AMC and APE since it was issued. Makes no sense to sell AMC. That's to you. That's at your opinion, Bill. If AMC goes to $10 a day before conversion and APE is $250, it makes total sense to sell AMC. Because if you don't, you're going to get diluted and lose money. And I have a calculator formulated to prove that. If you can't see it at this point, then good luck to whatever you're doing, man. Yeah, Bill does need to do more research. But that's what we're here for, to do research. Okay, what time is it? We're getting closer. Okay, we're getting closer to FOMC. Maybe the unusual whale space call is up. Heck. Good. Veteran bones, man. 12:55. We still got time. They usually start right on time. All right, back to APE and AMC. Guys, APE looks amazing. That's amazing. That is an amazing chart right there. I absolutely love it. And we're trending up. We're breaking out of the bull flag, but we're meeting resistance here. So there is a chance we pop 246.5. Let's just say 24. Let's come down here and just say 24, right? 24 cents or 245. God, man, I'm sorry. Low caffeine. 245. If we hit that, meet resistance or stay here and we drop back down into this triangle and bounce the bottom line on this resistance trend, then tomorrow we could definitely see a breakout above 245. Again, depends on the Fed news, man. If it's bad, you're going to see a horrible market reaction on the Fed news because everybody priced in a very bullish sentiment on the market with the Fed rate hike coming up. And I'm telling you right now, some of my puts are starting to value back up. They ripped me yesterday, but luckily I bought them out until March. They really ripped me, but I've got my SPY puts valued back up $336. My Pfizer put is just sitting there. Now, what did Pfizer do? It's still in the red and they're ripping. They are ripping my Pfizer put like crazy. It's absolutely insane. It's showing 11 cents on the contract. It was 26 cents 2 days ago before they did this dump pre-market. All these put options were in the money right here. 100,000 puts in the money on Pfizer at under $42. And then they just absolutely ripped the options chain. where the contracts went from 26 cents in the pre-market to 15 cents. But they didn't take back any serious trend line here. But it does look a little more bullish today. But we'll see, man. If the Fed comes out or there's news, Pfizer has a lot of bad news on it. If they come out with, 15 Michigan congresspersons, state Congress in Michigan, actually wrote letters to Pfizer demanding that they explain the Project Veritas problems. Froggy disappeared for so long, now all of a sudden he's back telling everyone to sell AMC. Bill, I was moving, you fucking twat. I was moving into a new house. I have a kid. I didn't leave Twitter. I wasn't streaming, and now I'm back. You're a fucking jackass. You're going away. Bill Ferguson is an absolute moron. Excuse my language, everybody. God, I hate people like this. These are Bill Ferguson and Sammy are the apes that destroyed this play. They're the ones who scream $100 or nothing. I'm holding till zero. And Adam Aaron comes out and goes, oh my God, they really will hold until there's nothing left. And you're gone because people don't want to sit here and have you spam the comments. If you have a negative opinion, come in and say it. But when you spam the comments, you're just gone. You're stupid. All right. Carlos at Prometheus should have done it when APE was, God, man. My buddy Joey Cameron got in at like 66, 68 cents. He made a freaking killing, man. And good for him. So he's been buy and hold. Nice try, Hedgie. You're an idiot. Another moron. Jordan Knoll. Absolutely stupid. I do not work for a hedge fund, and everybody knows that. You're a complete moron. No one is telling you to do anything, Bill. It's an opinion. Absolutely. That makes more sense. No, Dave's, oh, Jesus. I've been doing that for 6 months. If you want to buy and hold, good for you. Go do it. You're going to get diluted on your AMC unless your cost average is below the current AMC price. If you have a $20 cost average, and I've got a little formulated calculator, and I showed you morons. If you have an $20 cost average, 10-to-1 reverse split, your new cost average post reverse split is going to be $200. If AMC stock price is at $550, you're going to have a $55 share price. Adam Aaron is going to come out and say, I want to do a capital raise. And he just sold short sellers hundreds of millions of shares at 66 cents, which is going to convert into AMC shares at $6.06. So you're just absolutely moronic if you think your AMC isn't going to devalue. The only way it wouldn't devalue is if APE caught up to AMC and it was at exactly the same price. That's the only way your AMC won't devalue. It would need to go above your cost average, and then APE would need to meet it. That way the APE dilution at the lower price does not pull dilution and pull volume and not volume, but value out of the AMC stock. It's not complicated. And Jordan and Sammy and Dave or whatever you guys' names are, you are the type of people that sit in Ape Radio and mislead people into holding the worst bag in history. And it's so frustrating to see. So frustrating. Adam Aaron literally, I tweeted, hey, convert, reverse split, do this. And then he announced it. And then I said, last Friday, I tweeted, hey, man, it's a really good time to drop this news so we know what we're getting into. And he dropped it. He listens. And it's crazy that people come to the expenses of this. Okay. I'm just done. These people are stupid. The poofling and apes is what I call them. 90% of the people in this chat, you guys are apes evolved. You're very, very awesome people. You're great in the comments. Great listeners. You know, you guys please sub, share the video. But these morons that come in from Morant's channel, or, you know, they to me look like the hedgies that are coming into the channel to blow up the comments and make it absolutely stupid. All right. I've been buying ape since it was given to me in 1-1, and my average is still $1.40. Then you did the right thing, Prometheus. You definitely did the right thing. I've been flipping it to make extra capital on the side to prepare for exactly what's happening now. And I have 3x'd my position on ape because I was flipping it properly. So, but that takes time and effort. What do you think about BXRX? I feel like I kind of got stuck in it. Ooh, that sucks. Let me check. BXRX. Don't know anything about that company yet. Okay. Oof. I hope you didn't buy on that run up, man. I'm guessing you did. Let me know your cost average if you can, if you want to. I'll tell you right now, these pump and dump stocks, these meme pump and dumpers, you know, that these things rally like crazy. You're sitting on a support, which is okay. You're sitting on like a, let's see, let's go to the 2-hour chart. Zoom in. You're sitting on a very important support line. You don't want it to dump below that. If it breaks below that, you're going to see more downside all the way down to 230 something, right? Is my opinion. I'm just telling you this like if I was in the play in your situation. I'm not telling you what to do. It pumped, it ran sideways, it pumped real hard, it came all the way back down, it's running sideways. You could get lucky and get another pump and say if you got up to here, this would be your first resistance at $4 and let's just say 80 cents, right? 484. If it pumped and got to that line and you could get out clean and save your money, I would get out right there if it pumps again, which it possibly could. It's pumping. It's like you can see it. It's just consistently, randomly pumping. BXRX. What is BXRX? CloudX. Bio? I hate biotech, man. I hate bio companies. They're attacked so much by short sellers. Revenue is bad. The net income is bad. Net profit margin is bad. Missed massively on earnings. It looks like they're just a heavily shorted stock. What's the short interest on this thing? XRX short interest. It's got 10.5% short interest reported, so there's a good chance that it's probably higher than that. So you could see some short covering, and you could have another pop here. So keep your eyes open for the next pop, which looks like about 12. We'll say 12.10 to 12.29. It looks like about every 20 or so days it has a pop. And you're already halfway through, so I would wait till probably like here. And what's nice is when it dropped, it curved down to its trend line. So it'd be cool if you started seeing it curve back up and then it popped and you could get out of the play. I do not like investing in biopharma. If it's Carlos. Big ad, Spence, you can't help the diluted. I know, man. It's just so frustrating, dude. If people lose money, whatever, it's not my business. But when I'm trying to help other people and we're trying to get through this together, and for the sake of AMC, Adam Aron has to raise cash or AMC will go bankrupt. Bottom line. Even Bigum said that. Help Billy or whatever. Hashtag help Billy. If it squeezes, will you sell, Carlos? The question of I'm going to put a poll up for Carlos, man. That's such a great question. No, man, if it squeezes, I'm holding forever. Yay. Fuck. I'm putting this up for you, Carlos. We're going to take a poll and see what everybody says, man. That's a good question. Start a poll. And then I'm going to laugh at everybody and call y'all sellouts because you're going to vote yes for selling during the squeeze. I'm going to call you a sellout and a shill and a FUDmaster. If AMC squeezes, if AMC and APE squeeze, this is going to be funny. Will you sell? That's maybe some people won't. Maybe they really just want to be in the company forever, man. No problem. Yes or no? All right, the poll's up, guys. Go ahead and vote. Again, please like, sub, share the video, guys. It helps push the message out into the algorithm. I can reach more people. We're already rebuilding our following from when I did take a break very well. I love it now because we have more to talk about. We have a time frame. There's more intensity. It's absolutely amazing. Dude, that picture he drew of Billy getting hit by a car was hilarious. It was funny. It was funny. Now, my only problem with Bigum's, man, and he was very against Mark Cohodes. He was very against T0. He was against DRS. He was against everything that could have made a big difference in this play. And I'm sorry, he was just wrong, man. Phase 6 is not helping the play at all. Phase 6 initial margin is just helping the market makers and the institution. Bro, $20 in my squeeze now. All right. Ooh, market's going red. What's going on? What's going on? The mark, okay, check it out, guys. Look, everything's going red. Right before the Fed announcement, someone always knows. Someone always knows. Someone always knows. And Michael Burry tweeted sell last night. Right after Jim Cramer tweeted buy. Michael Burry. Crazy. Hashtag FOMC 2023. Okay, let's see if the space call started, right? 12:23, nope, still up. 0.25, is that what happened? Or is that just a guess? I don't think it's out yet, is it? Come on, Unusual Whale, start your space call. I want to hear what you got to say. All right, what else is going on? Let's check some tweets. You guys want to check some tweets? If AMC and APE squeeze, will you sell? Let's just get back to the basics, man. Bro, you wouldn't squeeze, is you gonna sell, bro? Uranium is heating up. Yeah, I told everybody uranium was gonna be a big deal. Funny enough, Highcroft Mine has uranium deposits out there too. And Sprott is big into uranium. Roger James Hamilton, cool, here's a tweet. Part of CEO Block, fighting the naked short war. I recently wrote this article on why financial literacy needs to be taught in schools. Abso-freaking-lutely, we've talked about this so much. Excuse me. Hot box stock market, it's great. We need more teaching in schools about teaching young adults about debt, interest, how to use it properly, the bad ways to use it, and how to build value in your life. Like me, I made a ton of money selling properties this past couple months. I'm not like a real estate agent. I just bought a property here or there, saw good value in it. I kept it. I wanted to build or didn't build. And when I sold my home in Michigan, when I moved to Albuquerque, I made like 30% on that, which is great, which helped me immensely. And now, since the market's starting to cool off there, I'm going to wait till it hits bottom. I'm going to go back to Michigan. I'm going to use some of my APE money after this thing's over. And I'm going to buy a little cabin on the lake for really cheap at the bottom of this raging market. I'm really excited about it. And then I get to refinance this place next year at the end of the year for free. My mortgage lender made a deal with me that they would refinance me for free, saving me the cost. And hopefully by then we see interest rates back down around 4%. But I mean, mine's not bad anyways, and I just make extra payments anyways. So someone always knows. All right, let's go. What's going on? Dude, APE and AMC are holding strong, and I'll tell you why. It's because of the arbitrage play. They are holding like raging strong bull, strong like bull, man. They're holding great because the institutions are loaded up in this for the arbitrage play. And even if the SPY takes a dump because the rate hike is different than what everybody expected, we're great, man. This is a great play to be in right now, especially if you're playing it properly. If you're playing the arbitrage, or if you have low cost averages and you're working to hold for, a longer period to see AMC maybe one day go back to $30 after this is all over. So WISA bounced that level, held support. Let's see here, 913, which is funny because my puts didn't value properly when it came down to that new low. Spiking back up, but RSI is going up real quick. Let's see if she pops off and catches resistance at this level. If it catches resistance there and starts tracking back down, this thing's going to go to that $8.67 level, which by then I'll probably be able to cash out my puts and the money. I try not to hold call options like crazy unless it's the Pfizer one, because the Pfizer one's more of a protest. They're an absolute dumpster fire. They made so much money off of people's whatever, left or right vaccine. I don't care. They made way too much money off of this pandemic, and a lot of insiders in Congress made too much money too. All right. Yeah, WISA down 8% today, and my options are not. Dude, all my options are valuing so weird today and yesterday that it makes me think something is coming, like a dump is coming. And maybe I'm wrong. Okay. My options are starting to value back up, which is interesting. Yeah, I'm up. Now I'm up 200 on my Pfizer put, and I'm up 400 on my SPY put, which is really interesting. That's really interesting. Right before the meeting's about to hit too. 12:29. Did we just go back in time? I thought we were past 12:30 already. What's Tara doing? Can't believe I actually got a thing for her tweet. Oh, Hellbiz announced the second round of pre-orders for the wheel by Hellbiz. 3,000 vehicles aimed to generate potential. Nice. So they got another 3,000 orders? Or it's up to 3,000. I'm not sure, but it's 5 million in future sales. That's great. Puts. Oh man, there's so many. I gotta text PJ, man. I think an event is coming. I really do. Oh man, I left my door open. Be right back. I'll be right there. Hold on. Okie dokie. Getting cold. Let my dog in and I left the door open. Where were we? FOMC. Laser puts. FTX is in process of cutting 10% of management staff. Dude, unusual whales is phenomenal, man. Central banks bought most gold. We read that. Where is Tara's tweet? Why do I see her and then I can't find her tweet? Breaking, the FBI searches Biden home for classified documents. What? 8 minutes ago. Whoa. Whoa. Right before the FOMC meeting. So they're looking through Biden's home for classified documents, according to Tara. I don't know her source on that. Maybe it's so hard to tell when people are joking or not. Let's check Fox. Retaliation allegations and fired Google exec. Workforce woes. Former son of Lana catastrophic corn. Bear market trap. Don't buy the stocks. Market rally. Morgan Stanley said don't buy. So all these big institutions are coming out and screaming that we're going to be in the worst recession in years since like the 70s, and don't buy stocks because this rally isn't going to last. And I don't know, maybe there is a big crash coming, but I think retail is holding up the market way better than they expected. And I think Tesla ripped all the shorts faces off again. And me and PJ called it. We said Elon Musk is acting all crazy and erratic so that shorts pile into the play and then he can clean them out again, and he did. And then they had an amazing earnings call, man. It was absolutely incredible. I made $1,500 on a call option on that. I would have made about $5,000, but I got fudded out by Wall Street Journal or New York Times article saying that Elon Musk wanted to raise capital. And they were making it sound like the stock, like he was going to dilute. And then he come out and tweeted no, and the stock went freaking crazy, man. So I lost, I gained, but I could have had another $3,000 or $4,000. Oh, man. All right, back to the comments. Let me see what's going on here. All right. What's up with the comments now? Everybody's names are all different colors. I need some advice about how I'm an ape. In one account, $7, and my other account is $14.90 a share. Do you think it'll ever break even? So I don't give financial advice, but if your ape is at $7 and your AMC is at $14.90, my personal opinion, this is what I would do, right? AMC is running pretty decently, and so is ape. I would be averaging down on ape while you can, because the arbitrage gap between ape and AMC is still a potential profit from conversion. But if you're not averaging down on your ape at $7, you're going to get hurt. Now, trying to average down $14.90 on your AMC might backfire, because if AMC does stall out and it stays at that price, then you're not getting a great deal. I would load, personally, I would load as much ape as possible. Open up another $3,000 order. I invested $6K. I have 1,000 balance left. I don't want to spend more money on ape or AMC. I lost enough. I totally get it, man. Totally get it. But you're not going to average down. What's going to happen is your ape is, you're just going to lose value, man. I'm like, your new cost average, your new cost averages on the conversion reverse split, you're going to have $70 ape cost average, and you're going to have $149 cost average on your AMC. So wait a minute, it might be more than that. It's just times 10. You're just timing what your current cost average now times 10. Yeah, so you're going to be $149 on your AMC cost average. Now, AMC, after this conversion, if it's at $550, the new price of AMC is going to be $55. But you're not going to average down, and you're not going to play the arbitrage. You're going to be exactly where you are, maybe a little bit worse. If ape does not catch AMC, your AMC is going to devalue even more during conversion. That's the price of ape in both accounts, $14.90. What? Oh, you just have ape. So that's the price of ape, and okay. I'm sorry. Yeah, you need to average down on your ape, man. Well, you don't need to. Do whatever you want. But I would be averaging down like crazy. I wouldn't hold that bag. You're going to gain some. You're going to gain some of your value back on the conversion right now because of the arbitrage. But if you see ape go up to like $5 and meet AMC, then I would probably sell. That's why you want to average down. With arbitrage, when the ape shares convert, if they stay at 240 and AMC is at 6, then you want to convert your ape shares, because you will gain some value back on your ape shares, right? Even though your cost average is high, your ape shares are still going to value up. Now, you can gain value on your ape by ape either running and meeting AMC, or if it stays this way and you get to convert, but either way, averaging down would be good. Oh, man, my neck. Oh, man. I need a hot Asian wife. This is a problem. I need a hot Asian traditional wife, so I can just trade stocks and she can just be awesome. I need a Chi-Chi, man. Where's my Chi-Chi? Tara, what are you talking about? I don't see any news. I want to know. Maybe she's joking. I don't know. It's hard to tell. AMC cost to borrow is 500% according to Ortex. Cool. Thanks for posting, Nico. But Ortex is like a dumpster fire, and everybody's realized it. Hard to borrow on AMC. Oh, everybody's tweeting, man. Maybe it's right. Thanks for posting, guys. So AMC, like I said, does have potential for a breakout coming up. And they're green, man. Tesla, Ape, and AMC, all green, and the entire market's red. Something is coming. Cannot wait, dude. AMC came back down this morning, hit the bottom trend. It's picking back up. Oh, baby. Well, I better check my DMs, I guess. Market red. What else is going on? Someone is placing big bets. Even if the market doesn't dump today, these huge QQQ puts, they're out for a ways. Somebody's placing big bets that this market is going to take a dump. But the great thing is I feel more secure in APE and AMC than any other stock right now because of the arbitrage opportunity. It's actually working out in everybody's favor. WISA starting to cool back off. Okay. That one's going to be one we watch for a while. But I think I should have bought my puts out further. I think I only did Feb 17. So that's right around the corner. So next week, if it doesn't make a move, I'm going to have to close them out because I don't want to get eaten up. Bro, this is why I hate Siri. Why is Siri operating on my phone? That's weird. All right. Back to unusuals. Six minutes ago, top five ticker flow. There's more bears on the SPY than there are bulls. Of course, there's more bears on the side than there is Tesla. QQQ is actually more bullish than bearish, according to that, but the bets are huge. And AMD is bullish. Lots of bears on the SPY. And huge bets on the QQQ. That's it, man. This is something's coming, man. The King Contrarian says we see 50 BTS and a limit down. Yes, I am aware of the 99% possibility of a 25 BPS. I base this on strong unemployment numbers and core PCE trend says inflation still persistent. Why stop the aggressive hikes? I predict the 10x VIX spike today. Wow, well said. Well said. I'm going to follow that guy. That was really well written. I like how everybody always has to have contrarian in there. And now it's time for Froggy Stonk's vocabulary and word of the day. Word of the day. Here you go, guys. Contrarian. A person who opposes or rejects popular opinion, especially in a stock exchange dealing. There you go. Word of the day, contrarian. Pee Wee Herman, man, that show used to be my jam, Pee Wee's Playhouse. I wish my mom or my dad wouldn't have thrown away the official Pee Wee's Playhouse playset that I had with all the characters and the full string Pee Wee and all that stuff. Man, if that stuff was still up in the attic right now, it'd probably be worth a lot of money. Oh, I got to show you guys something that I found at the, me and my kid like to go thrift shopping. I found a treasure the other day. I got to show it to you. I do other investing. Pretty dope. I bought it for 99 cents. It is the 1980 extended version Star Trek the Motion Picture original VHS cassette tape in the case, and it works, from Paramount Home Video. It's dope. I bought it for 99 cents. It's in great shape. I just need to wipe a little bit of like finger stains off of it, whatever that stuff is. But 12 minutes of new footage, man. This is great. It was a total treasure. I mean, I literally could put that up on eBay right now for $10 and a collector would buy it. Like, if somebody would buy it, and you know, that's, people need to start thinking more like this, right? If I bought it for 99 cents, and I just do this in my head, but 99 and I sell it for 10, right? Look at that gain, baby. 910%. Look it. That's a short squeeze on Star Trek the Motion Picture extended footage. That's a short squeeze, baby. You know what? Maybe I should just put it up. I don't want to sell it, though. I want to keep it. I want to watch it. I have a VHS player and hooked up in my movie room, and I like to go and watch 13th Warrior on VHS. It's so relaxing. the previews and all that stuff, but it just moves a little slower, more analog, and you can just feel it in your soul when you watch that stuff, man. It's great. Oh man. Oh, I do have an original it's not original, but I do have a Star Wars Return of the Jedi cassette tape too. One of the newer ones, one of the remanufactured where they boosted the resolution and stuff, but it's still pretty cool. APE, AMC reacting to the market a little bit. APE staying so strong, man. APE wants to break out so bad, man. If it comes back down to cool off and keeps this upper trend line, this upper out of the bull flag, and it bounces this, APE is going to break out soon. It's going to try to meet AMC. I hope you guys make so much money off this if you've been listening, man. All right. Pete from Philly was DMing me. I got to check and see what he says because he's talking about the market. Well, that's normal. I sat in a space call just the other day. That Virtue was in deep shit. Doug Sifu has been broadcasting himself too much on Twitter. And I always thought Virtue was part of the problem. He did some publicity that looked really bad. Like he lost control of himself a few times. I think Virtue is going to be one of the first ones to go underwater when this all pops off. And I'll tell you right now, if they were short anything like Tesla, they're hurting bad. But Virtue is definitely something shady going on at Virtue, in my opinion. Oh, hold on, Bubba. I'll get you some water. I hear my dog licking his bowl. Okay, back. Let's see here. You know, I guess I should share my own YouTube live stream. Probably a good idea, huh? Okay, sweet. Our live streams have been really great lately. I appreciate everybody coming in. Tweet. And I'm trying to change my profile photo on Twitter to the one that I have on the new Froggy Stonks banner. But right now it says it's verifying my account. It's been doing that for 2 weeks, so I can't change my profile image. Oh boy. Home, following. Let's do For You and see what's on For You. Oh, T-Dog. And 8 passes AMC on the day. It's called Arbitrage. People, bingo. Uncertainty in the market. T-Dog's got it right, dude. He's on the same page. He's posting great stuff. Do it. Do it. Do it. 100-point rate hike. Oh my God. If they did a 100-point rate hike, oh my God, dude, that would be a disaster for people. Not for me, because I've got puts into FOMC, which is low risk, and on companies that I personally Not that I hate WISA. I have no opinion on WISA, but Adani and his companies have called off their $2.4 billion equity fundraising. Well, that's a big deal. You guys know who Adani is? Gautam Adani lost tens of $1 billion. What happened? This guy's been in the news a lot lately. Big time mogul. I think India, yeah. Asia's richest no more. Gautam Adani's wealth crashes as 90 billion wipe. All right, you click a CNN link and it doesn't work. What do you know? Dumpster fire media company. Dude, I get all my news from Twitter now. Every bit of news I get is from Twitter. I hate the MSN. I go there to try to verify and corroborate, but the MSM is such a dumpster fire, man. Twitter is the news. Twitter. Oh, meme time. We're making a meme. This is how memes are made, people. I love image flip. Where's it at? Image flip. I need the Twitter logo. Boom. Hopefully it's won't have to take the background out of it. Come on, I want one that's already. How is there not one with a background? Ah, perfect. Save. When you see that checkered board behind it, that means the background's been removed and you can overlay it over an image. And now I need the CNN logo. Perfect. Save image. Okay. Now we go back to our meme generator. We want the dual one though. Perfect. Cat at 2 a.m. We can crop that. I'm teaching you guys how to make, this is an important part of day trading in the markets. If you guys do not understand, I'm actually writing a paper called Meme, right? Meme is not just a joke anymore. It is a language. It can move populations. If a meme, I always say, the funnier the meme is with the least amount, the less words it uses and the funnier it is, the more power the meme has to portray the truth, right? Because you're hitting a psychological aspect of a human who sees an image that's contexted to a movie to generate a sense of control or event or person, place, or thing, something like that, right? But like this one that I'm about to build carries more weight than me tweeting that Twitter is the news. It carries way more weight, right? And people will react to it more other than me just writing words, which is really funny because it's like we're going back in our communication methods. We are going back to like hieroglyphic type communication means. Upload image. I love image flip. I've used it for years. Upload image. We want that one. Then we want to, oh, sorry. We got to crop that out. Then we crop. Bing, upload, add image, inside current image, upload, CNN logo, which is Tom Hanks. Perfect. It's actually perfect. Copy, paste, Control C, Control V. Now we upload inside image, Twitter logo. Shrink it down just a little bit. Control C, Control V. Shrink it down a little bit. And there we have a perfect meme, ladies and gentlemen, and I'm going to post it. And then I guarantee you it's going to get retweeted. I don't know if you have to put the period before tagging somebody anymore. Oh, and see when I search Terra, this is what it pulls up. It pulls up Free Terrible's 808, her side account for when she used to get banned when Twitter was like the Fourth Reich. Good, and it's a big, that hashtag news has actually got some power behind it. Look at me, I am captain now, CNN. That's a great meme. I'm pinning that one, man. Pinned. Pin. Yes. I should have tagged PJ in it too. I can go back and change it. I can hit the edit button. Anytime AMC gets any hint of running market dumps, we see soon. If we see a 50%, there are huge puts on the QQQ, and unusuals is showing bearish SPY. And someone always knows, man. The insiders already know what the rate hike is going to be because they put little, I'm telling you, man, they won't go so far as to fund $1 million robotic fly that's sitting on a wall in the room with a freaking recorder, man. I'm telling you. The thing is APE and AMC can fight back against a bearish market because of the arbitrage opportunity. The value is in the spread and the potential at low risk. Arbitrage. Okay, let's do 2 words of the day. Just because I know I say arbitrage a lot, I want everybody to know exactly what the definition of arbitrage is so that we understand this. Because sometimes people don't know, man. Arbitrage.
Arbitrage.
The simultaneous buying and selling of securities, currency, or commodities in different markets or in derivative forms in order to take advantage of differing prices for the same asset. Buy and sell assets using arbitrage. Much of the short selling was being done by people who were arbitraging between the bond and the equity market. That is exactly what is happening with AMC and APE. That is exactly what's happening with AMC and APE. And if you're just here going, no, man, everybody just hold your AMC and buy and hold AMC. Good for you. I'm not telling you what to do. But I'm telling you, if you didn't play this arbitrage play and make money off of it, you're crazy, man. You're crazy. Ah, space call started. Why isn't it up? Oh, come on. What's going on here? Usually a space call has started. Oh, it hasn't. Bastards. Come on. I want to know. What is it? People are going to start posting the rate hike here any minute. Guys, if you're not following Greg on Twitter, at Greg16676935420, you should. Greg's awesome. And Ethan, too. Ethan Leibovitz, 18, man. That dude has put a lot of work in for the community. Should CEO Adam conduct a legit share count reconciled where every share is accounted for being before March? Yep. Willie? No. Well, there you go. They paid Agenda Group wants more dilution. Dilution will remove any short thesis. DC Shaw is an absolute fraud. The dude is an absolute, he has no clue what he's talking about. He's the one that said DRS is bad because if we DRS all our shares, then short interest goes away. And without short interest, there's no short squeeze. That is so stupid. If you DRS and short interest goes away, that means short's covered and you're starting the squeeze. Dude's just absolutely stupid. And people hang on to every word he says. Now he's pushing that dilution will remove any short thesis remaining and force every institution who is short AMC in a cover close position vote yes. That absolutely will not happen. If we vote yes and the stock is diluted, shorts do not have to force close. They can carry their short through the conversion dilution, and they probably will come back in with their hundreds of millions of new shares and then short AMC right back down to the ground. That's financial advice. Vote yes. He is telling people to vote yes. That is financial advice. He is not a financial advisor. That is stock manipulation. Oh, someone please tell AMC Bism Phase 6 doesn't do anything. Zero margin calls. Snow Ape 1. Join June 2022. Yeah, it's a bunch of sock puppet accounts that anybody that disagrees with me or Froggy Styles ends up using a sock puppet account to come in and attack. It's just stupid, man. These guys are clowns. We know what we're playing. We know what we're doing, and it's working perfectly right now, exactly how we covered it.
Jem Carson is a leading volatility expert, founder of Kai Volatility, which you should subscribe to, and an incredibly passionate educator in the options, vol, and flow space, and was recently on CNBC. Welcome, Jem.
I'm kind of a big deal, guys. Great to be here. Always enjoy these conversations. Get as much out of it as I
just tell us the rate hike.
Wonderful to be here with all these guys.
Appreciate having you, Jem. Thank you. Next, we've got Bob Elliott, the CIO at Unlimited Fund, former IC at Bridgewater, and an all-around macro geek, a third-timer to these spaces. Let's give Bob a warm welcome. How you doing today, Bob?
Hey there. Thanks for having me.
Looking for a breakout.
Well, it might be exciting or it might be boring. I guess we'll have to see.
Maybe we'll get a little bit of both, hey? So next we've got the Last Bear Standing, a friend of the spaces. Always happy to have him here. Last Bear is an expert on numerous things, writes about the markets, economy, and monetary policy in his weekly Substack, where he also details the subtleties often forgot in macro. If you're not subscribed to Last Bear's Substack, please go do that. Welcome back, Last Bear.
Thanks for having me. Just want to echo what some of the other folks have said, that these spaces really are, I think, the best out there, and I definitely learned a ton and look forward to hearing from everyone else who's on here. So you guys do a great job with it, and I'm looking forward for the discussion today.
Looking forward to it as well. Thank you, Last Bear. And last but not least, we've got Joey Politano. Joey is an active friend of the spaces as well, shared by all of the greatest economists on Twitter. He's got a great newsletter. It's a must-read, dealing with all things macro. And check out his CPI one last time as well. We're honored to have you here again, Joey. How you doing?
Hey, it's a pleasure to be here. Thanks for having me on. It's a beautiful day here in Washington, D.C. The sun just came out and is like peering through my window, which feels significant for setting the mood. But yeah, it's a pleasure to be on.
Pleasure to have you. So now that we've got that going, let's just kind of jump in. Before we get started here, I just want to give a quick overview of where we stand macro-wise 1 month into 2023. At the last FOMC, we saw a 50 basis point rate hike, the 7th of 2022 at the time. The latest CPI came in at 6.5%, with the US GDP at 2.9% versus the 2.6 expected. We've also still been dealing with that inverted yield curve, which is usually regarded as a precursor to recession. So to start us off here, Last Bear, I'd love to hear what you're most looking forward to in the first FOMC meeting of 2023, given your recent statement. I quote, "For the first time in a while, I'm genuinely curious to hear from Powell this week."
Yeah, no, I am. I think the last couple go-arounds, not that I didn't tune in, but I think we kind of knew what they were going to say. It was clearly, if you're thinking about the dual mandate, the bias of the Fed was towards raising rates, and it was doing that in a fairly predictable way in the past couple meetings. Now there is at least some degree of balancing, I think, as they're looking forward into the economy, as to, taking into consideration both the level of tightening that's happened to date, with potentially softening macro outlook to some extent, combined with still an uncertain future on inflation. So I do think it's actually now sort of a more critical time, or at least a more interesting time than the past couple of FOMC meetings. So I'm curious to hear how Powell addresses that. I think 25 basis points is clearly the consensus, and I think I expect that that's what will happen. But I'm curious to hear his comments in the presser afterwards as well.
Thank you, Les Bear. And yeah, it does seem that consensus of the 99.8 chance is pretty widely accepted as the likely event today. And so on that note, Joseph, currently FedWatch has us at a 99.8% chance for a 450 to 475 target rate, which would, of course, mean that rate hike of 25 bips at the FOMC this morning. According to Forbes, that increase of 25 BPS is highly likely, just like we said here so far. But there's still some chatter amongst economists for the possibility of 50 bips. Joseph, what are you seeing for this FOMC rate hike, given that 6.5% increase in CPI from the December report? Is 25 bips too little or too much? What do you want to see on the dot plots, Joseph?
So as a principle, the Fed, at least the modern Fed, doesn't like to surprise markets. So those odds you quoted, that's basically a done deal. They're going to do 25. And I'm with Les Bear. I think what's really important is to see how Powell guides for the coming months. Now, the market is thinking that they'd hike another 25 and then maybe towards the end of the year start cutting rates. I think how Powell addresses those rate cuts that are pricing the market is really what I'm looking for. So as the last bear noted, we're at an interesting juncture where the Fed has hiked rates, as Nick, you summarized earlier. But at the same time, the data has come in a bit softer. So it seems like the rate hikes are working. And I'm sure Bob and Joey have a lot more expertise in the real economy data. But at the same time, the financial conditions have also loosened. So over the past few months, mortgage rates have come down, asset prices have gone up, the dollar has weakened, and you can see a very good Twitter thread by the Redfin CEO suggesting that the housing market is reheating up again. So Powell has a tough job. So he has a mandate of both full employment and inflation. And in the past, it's mostly been about inflation for the past year. So they've been happy hiking rates. But now with growth slowing, maybe unemployment might be coming into the picture. So if they were to maintain rates right now, maybe inflation will go back down, but then they might risk their unemployment mandate going back higher. From what I gather, though, and I think we've been very clear about this, that they view these risks as asymmetric. So they're much more afraid of inflation getting under control than unemployment rising again, because from their perspective, if inflation continues to go out of control, that means that inflation expectations could destabilize. So I'm inclined to think that Powell will push against the implied easing in the markets and talk, I guess, hawkishly. But I'm not sure the market would listen. The past few meetings, the market has been very content to ignore whatever the FOMC has been saying and just basically hear that rate hikes are imminent, even though that's clearly what they're not saying.
So we'll definitely dive deeper into that comment there later on, Joseph. But for now, that brings me to another point I wanted to ask, because many have voiced the question, does it even matter, right? Some would say that the markets currently see inflation on a trajectory of decline and expect a reversal for the Fed this year, some saying as early as spring. Markets seem to think this. But the Fed remains concerned that core inflation is still, quote unquote, stubbornly high and that inflation still has a notable upside risk. Jim, are the markets being overly optimistic? What are you seeing in both the markets as well as the volatility world, Jim?
Yeah, so look, just over a week ago, Brainerd came out and had a comment that I thought was particularly interesting. It got read kind of in two different ways, but she really elevated this this narrative that this is like a lot of this could very well be transitory, and that we could be getting back to kind of sub 2% inflation. The Fed hadn't really been saying that for a while, right? And for Brainerd to come out and make a big comment about that, I thought was very notable. Not a lot of people talked about it. Granted, Tim Rose came out just 2 days ago and then tried to talk about how the staff has now been pushing on the committee, right, to actually be a little bit more hawkish. But I thought that Brainerd comment a week and a half ago is very, very important in the sense that the Fed feels a pressure. They're getting pulled in two directions, and they feel like they need to stop and see, because the distribution of outcomes here in their mind, based on what they're saying, is very wide. And they've made a lot of moves. And the sense I'm getting is from all the comments, is that they really just need to survey, wait, and see. And that's what they want to do. The problem is markets have really front run this pause that they're talking about. The markets are quick to see that this is happening, and a pause is seen as very positive. A lot of people are underweight the markets. I'm personally, as a fund manager, getting calls all the time from people saying, look, I missed this rally. What am I going to do? How do I do this? And this is not from like $1 million investor mom and pop. These are $1 billion shops that are calling me and be like, John, tell us, how do we get in? What do we do? Should we wait? Should we not? There's a real, having missed this rally feeling going on. And so this market is going to, keep doing that in the short term. I think that's important for people to understand, particularly the next couple of weeks. And the Fed's in a tough spot because they're in the business of dampening volatility. They do not want these markets higher, because if they do, that means there's a natural kind of easing going on, and they're going to have to push up against that. So that's what this Tim Rose comment was about. The balloon that was floated a couple of days ago is about. I think you're going to continue trying to hear that from from the Fed today, but I don't think it matters. Like Joseph said, like the markets are about supply and demand, and people are kind of stuck and having to chase, and the Fed ultimately can't increase. I don't think they want to increase rates dramatically from here, though they may keep doing quarters for meeting after meeting, but that's not going to shake markets at this point. And so I really think the Fed's in a tough spot here, because the markets markets are going to naturally ease, and is going to force their hand eventually.
Thank you, Jim. And obviously, we're going to dive deeper into that as well once we're through these opening statements. A lot of really good points there, Jim, as always. So to move on to my next opening question here, it's recently been said that many believe a decade of persistently high inflation is possible, if not inevitable. Bob, you recently said that in Europe, at least, the ECB is seeing rising inflation and will be above 5%. Do you think, Bob, that inflation is going to be, as they said, persistently high in the U.S.? And as a follow-up on that, how do you think the markets adjust to inflation over 2023 and 2024, and what changes we may see?
Well, I think from a trading markets perspective, you want to start with what's priced in. And basically what's priced in, let's start with the U.S. context, is for inflation to return to essentially 2% or darn close to it and stay there forever, with no issues. And that is certainly a possibility, that we return to basically the pre-COVID era of persistently, 2% inflation. At the same time, I think there's a lot of reasons, both cyclically and structurally, why you would expect inflation to be higher than 2% or higher than it was over the course of the last, say, 20 years. Those include things like, forced onshoring, deglobalization. Those are some of a fair amount of limited structural investment in commodities that happened for a long time. All of those things are things that would structurally cause upward pressure on inflation. And then tactically or cyclically, in the United States context, you've got, you still have relatively tight labor markets, all things considered. They've softened a tad, but, unemployment is at secular lows, and real incomes have been negative over the last in the post-COVID period. And so it could easily make sense that you have a situation where the cyclical pressures continue to put upward pressure on inflation as well. And so when you look at that mix of things, the odds that we have something that's higher than 2 rather than just at 2 seem, balanced, skewed in the favor of something higher than what's currently priced in. That then, we're sort of narrowing the scope more and more. From the Fed's perspective, I think it's really important to recognize the Fed got burned by trying to predict what the heck was going on over the course of 2021 and early 2022. And that was, if anything, a bit of an unusual stance, because typically the Fed looks at the data and responds to the data that they see rather than is predictive of what's likely to happen. And so that's when we narrow in on what's going on right now. Like, the Fed in the last couple of months has seen moderating inflationary pressures across a lot of different dynamics, partially from commodity prices, partially from goods that had supply chain issues that are now getting resolved, partially from services. All of those things are coming down. They may not be coming down as much as they want, particularly in the services X housing part of things. But you're looking at core PCE and PCE numbers in deflator numbers that are in the ballpark of what they want to have happen over time. And in many ways, they are constrained by that reality. Even though they might see some of these things I just talked about on a longer term basis, they're constrained by the reality that they need to be responsive to that. And so when you see moderating inflation, slowing growth, you've tightened a lot, it makes a lot of sense that we'd be transitioning from a point of tightening relatively aggressively to taking a pause, taking a beat, and seeing whether or not they have done enough to help structurally break those inflation pressures. Do I think they have? Probably not, but they're constrained by that data, and it's the most prudent decision for them to make, given what they're seeing, to move to a pause.
Thank you, Bob. Now, Joey, I'm going to spin to you here. You were recently shared by Paul Krugman, which is good or bad in some circles, depending on your social circle. But you said ECI data recently makes a soft landing more possible despite everything we said. Now, given Bob's comments on inflation moderating across all data sets, Joey, could you explain in reference to your recent CPI data post on soft landings and what the data is telling you?
Sure. So I would say, right now it's like February. If you had come and talked to me like 6 months ago and you said, Joey, what's the chance of a soft landing? Where, in my mind, a soft landing is just one where you're able to get inflation back down to target, back down to 2% without a recessionary increase in the unemployment rate. If you had asked me that 6 months ago, I would have said that chance is fairly low. And I think most members of the FOMC would have actually agreed with that sentiment. If you look at like the summary of economic projections, the median FOMC member expected the unemployment rate to go up 1% this year in 2023. That was their last projections. And that's like a recessionary increase in the unemployment rate. Like, no two ways about it. That's a lot of people losing their jobs. It's a very severe downturn. And in my mind, it was kind of a naive forecast because it was saying, oh, the unemployment rate is going to rise, and then we're just going to catch it really quickly. It's going to stop rising. We're totally in control of the situation. Things are not going to get worse immediately after that. So the outlook was, pretty grim. In the months since then, obviously we're seeing like the higher interest rates, tighter monetary policy, worse financial conditions passing through to real economic variables. And we're seeing a pretty substantial slowdown that's passing through to prices. So we got like some encouraging CPI data, including especially some encouraging prints on the non-housing components of CPI and core services X housing prices, which is a very narrow subset. To me, sometimes it feels like you're saying if you just exclude all the other prices, just focus on these one things, this is where we think the core of inflation is. And in their models, in the Fed's models, those are driven by wage pressures that need to alleviate for inflation to structurally return back to 2%. So that's them saying, okay, we need to get wage growth back down to where it was before the pandemic for us to have any chance of getting inflation back down to normal. And the ECI data we got 2 days ago showed a pretty substantial deceleration in wage growth, one that was faster than people expected, faster than the consensus estimates, and one that, combined with the slowdown in the job market, the slowdown in hiring, points to a labor market that in my mind is not adding as much to inflationary pressures as it was even 6 months ago or so. And so that combination of, okay, you've raised rates, you're having the very core pressures on inflation alleviate, and so far the labor market has remained fairly strong. That to me is like the Goldilocks recipe for a soft landing. And while I wouldn't yet say that that's the base case or the most likely case, I think the chances of that occurring have been steadily rising since about the summer of 2022.
Thank you, Joey. Bob, go ahead. I was just about to ask if anybody had any comments before we move.
Both in terms of like 6 months ago, the idea that a soft landing could occur was, close to very, very low probability. And today when we see things, we see, it is a more plausible outcome than it was back then. I think it's important, though, to look at what's priced into the markets relative to the plausibility that we get a soft landing. And, in a lot of ways, if you look over the course of the last 3 months, the combination of the rally in bonds, the expected cuts, the expectation of low inflation or a swift return to 2% inflation, and equities rallying a ton, all of that is pricing in an increased probability of a soft landing scenario. And I think when you look through each one of those pieces and you kind of put it all together, what's priced in for a soft landing is closer to, let's say, 75 or 80% when you scan across markets. But the probability of a soft landing has only moved from maybe, 10% to maybe 30%. And so that really that's the core of the opportunity, I'd say, in trading markets right now. Is recognizing the overpricing of the probability of a soft landing and finding opportunities to fade that in a variety of different places.
Thank you, Bob. So does anybody else have anything else to add from the inflation data? And
recession, right? That markets are the economy is completely wrong. It's something that everybody's taught on CNBC and all these other places, that like the two are the same thing. 60s and 70s, right? The market went nowhere for 14 years. We had above trend economic growth in real terms with inflation really high. Nominal GDP was very high. Markets went nowhere for 14 years. Markets, the worst case environment, Bob said, nobody would have expected the soft landing. I've been sitting here for a year and a half saying soft landing. That's what the 60s and 70s were. It was a series of soft landings, low kind of, recessions followed by some strong growth. It was a demand push economy. We are in a demand push economy. It will continue to outperform what people expect on a GDP growth side. What that means, though, is that every time that demand push comes back, right, the Fed has to get more active again, and inflation will stabilize at higher and higher long-term rates. We haven't had a lot of the effects of the Fed's raising rates because it's just been based on the short end of the curve. The long end of the curve is still, expecting everything to go back down to 2%. What happens when all of a sudden the world catches up to this idea that long-term interest rates are actually going structurally higher? I think that's the important piece that a lot of people are missing. I think the more you hear the word Goldilocks, I just heard the word Goldilocks, the more you run for the hills. Do a little search right now for search terms, Goldilocks. Look at what that chart looks like. That's your biggest warning sign yet. So I think there's a rally still underneath this market, but just be watchful here, because a soft landing is probably the worst thing for markets.
Thank you, Jem. Some good feedback and opinions there. Love to hear all of that. Last Bear, do you have any thoughts here regarding soft landings and what Joey and Jem are saying, or any other panelists after Last Bear as well? Feel free.
Yeah, no, I think I kind of agree with what Bob was saying earlier about where the market is pricing versus what the probabilities
I'm doing so
are.
good on my APE
One
right
thing
now.
that
I'm doing so good.
So like if you play out this soft landing scenario, I don't see that the Fed is going to start slashing rates by, back down to zero, to the extent that unemployment is
I'm up
low
23.72% on my APE on my last
consumption and
buy-in,
real
but I
growth
took
remains
profits
positive.
way higher.
And yet,
on the last
effectively,
one.
that's what's being priced in the market. If you look at Fed futures or just long end of the Treasury curve, or long duration yields in general, really those only make sense if we see substantial rate cuts in the near to medium term, and you just don't get that in the soft landing scenario. The Fed would be, if unemployment stays low and inflation comes down, as I think Joseph mentioned earlier, the Fed's bias now has changed a lot. I think in the past 3 years, from going from really being more scared about the unemployment side of their mandate rather than the inflation side, and if anything, thinking of ways to maybe get inflation a little higher. And so they acted in a policy manner that reflected that attitude. Now I think that situation is reversed, where the Fed feels pretty comfortable in its ability to stoke the economy and stoke inflation if they needed to. They've proven that they can do it. And so a scenario where they're still sort of, working to rebuild their credibility, and real economic growth is strong, and the unemployment doesn't, explode in some dramatic fashion, I just don't see rate cuts happening in the way that they're being priced. So I think I agree with Bob that there's a disconnect between sort of the soft landing possibility and what the market is sort of pricing, which I think is harder than a soft landing.
So I'll jump in about the soft landing. I think one of the big macro forces that is happening now is that our population is aging, so our workforce isn't growing as quickly as it used to be. And if that's happening, if your workforce is not growing as quickly as it used to be, then when you look at unemployment, you kind of have a tailwind if you're the Fed, because even if, let's say, things go south in the economy, unemployment can still stay pretty low simply because of demographics. And that's a big shift in the world that we haven't seen before. And so going forward, I think that if you have this kind of structural tailwind keeping unemployment low, the Fed would be more focused on inflation. It would be kind of becoming more like a one-mandate bank, since demographics take care of the other mandate. I really like Jim's point about interest rates. Now, I think asset prices, like Jim mentioned, are all supply and demand. So it's hard to infer too much from where.
All right, real quick. They're just chit-chatting. APE looks so incredibly bullish, man. It looks so good. We are above old resistance of 226 in a major bull flag breaking out to the upside. So it needs to it's going to try to catch 250, retest 265 on the breakout. And then if we go back and we look at the long term, our major next resistance after 265 is going to be basically $3, $2.98, $3. We'll just say $3. Yeah, $3 right there. This thing looks like it's ready to absolutely explode to me. Major breakout on the news, sold, took profit, bought back in. Oh no, that was the news. That was the big news. Bought back in, J Powell, we had the market dip, sold on the pump, come back in, $1.90 cost average. I'm loaded to the max. This is the crazy thing. Is I bought in around like 75 cents, 80 cents. If I would have got in at bottom, man, holy crap. This is so bullish right now. And look at this. We are having a breakout at the moment. That bull flag is gorgeous. That is beautiful. Oh, baby. Absolutely beautiful. Breaking out, man. Hopefully she maintains power and breaks out and catches this as a new bottom. Yeah, have a good one. Kept us up in our heads. We got this. Have a good up in the dog. I'm adopting. Oh, nice, man. I need to go adopt. I'm going to go save a dog from the pound. A smaller one. So my big dog, he's a big baby, man. He needs a friend to like play with and stuff. So, yeah, burritos. Go to Fuego 505 and get the Fuego Bowl, dude. Prometheus, you won't regret it. It's really good. So APE is breaking out. I'll go back and see what
20% chance that inflation is persistent without much of a slowdown. And in each of those scenarios, the interest rate path the Fed takes is radically different. And so the interest rates we see today, the financial conditions we see today reflect partially messaging recently where they've been trying to say, like, we're not going to cut in 2023. Cool. That means a recession is going to happen or is more likely to happen. And that means you're going to cut rates. And so it is this like really weird dynamic. And I think especially if you're looking at this from the perspective of trying to price in that risk, it's very difficult right now.
Thank you, Joey. Bob, do you have any comments on what people have said so far in response to your last commentary there?
Oh, I think the point about this story, I think it kind of goes back to your opening question, which is like, if you believe that it's even possible that there's going to be a soft landing, or you think it's of some probability that there's going to be more economic momentum relative to, what the Fed can do to slow it down, then you should hate bonds. And that, I think when I look across, what's priced into assets in particular, the bond market, an extremely high probability the BEI is priced.
This stream is having trouble for some reason.
That circumstance seems like
I'm going to leave and reopen it. It's time for me to get a new computer, that's for sure. Oh, man. Trying to get back to the restream. Haha, my meme's getting retweeted, baby. Let's see who's retweeted and if I need to follow them. That's what you should do when someone retweets you. You should follow them. I believe that's proper ethics. Oh my God, why is my Twitter updating every time I move? Stop it. Stop changing my feed. Because my PC's working overtime, man. I've had this Dell gaming laptop for a long time. It's a beast, but man, it's definitely time to upgrade her. Sucks because then I'm gonna have to reset. I don't want to reset everything all over again. Set it all back up. I guess move in my hard drive
in late January of 21. Joseph, can you walk listeners through a bit what this means for them in the market? Is this yield curve inversion indeed the harbinger of an impending recession? And does the Fed even really look at these indicators? And if so, how, Joseph?
So that's a great question. Historically, people think of a curve inversion as a harbinger of recessions. And if you look at the track record over the past few decades, it's a pretty good track record. Usually the curve inverts before recession. And it's helpful to think about why that might be. If you think about long dated yields as just the path of short dated yields plus a little term premium, then when longer dated yields are trading below shorter dated yields, then that's basically the market suggesting that the Fed will eventually cut rates very quickly. And then if you take a step back and think, why would the Fed be cutting rates? That suggests, well, the Fed usually cut rates because the economy is not doing well, there's a recession. So that's I think that's the logic to it. If you ask Jay Powell or the Fed officials what they think about this, and Jay Powell has been asked pointedly what he thinks about this, and honestly, he just kind of shrugs his shoulders. He doesn't really care. And part of the reason I think he doesn't care is, as a central bank, he's kind of in the habit of, I guess, adjusting or influencing interest rates. For example, he buys trillions of dollars of long-dated bonds in the market. Obviously, the point of that is to put downward pressure on longer-term yields. And if he has such a big influence on this, then you have to kind of think and wonder, does the longer-term yield still have as good a signal as it did, I'd say, before the great financial crisis? And a lot of things have changed since the financial crisis. You have not just large-scale Fed QE, but you have QE across the world and other central banks, such as the ECB as well.
Got slapped in the face, but let's
and
wait
the way
and
the
see.
sovereign bond market works is that global sovereign bonds are connected.
Oh, man,
so
I got
if you
slapped
have
right at 250.
one country far away
252.
suppressing their interest rates, let's say yield curve control in Japan,
Now we're moving our
that bleeds
resistance to
into all
252.
sovereign bond markets as well.
It breaks
And when you
252.
do
If
this
we
on a
see a
massive
breakout to the
scale,
upside,
and we are doing
and
this
we
on a massive
close
scale,
like 252
I think
today,
it stands to reason
gain
that
support
maybe
at 252.
the signal isn't the same as it was
Next,
before. Now,
next
that being
resistance
said,
265.
from what I understand, the Fed is making efforts to try to
Out of a big
push
bull flag,
longer-term bond
man.
yields higher,
Ooh, wee.
maybe to tighten financial
I'm
conditions a
excited.
bit. The way they do this is quantitative tightening, where they let the bonds they hold on their balance sheet roll off. And of course, the U.S. Treasury is doing their part by continuing to issue
25%
significant
on my
amounts
APE
of
now,
debt
and I have a
and
huge position.
this year and for the foreseeable future. So I don't really, my own view,
right now.
I don't really read too much into a curve inversion. I expect that to actually gradually, if not flatten in a bearish way, or to re-steepen going forward.
Thank you, Joseph. Jem, one thing we never get to speak about is how rates and bonds correlate with market volatility conditions. So, Jem, I'd love your take
AMC's
always
looking
here.
great
Since
too,
if I don't
man.
ask about it now,
AMC's
I
looking
may
great.
never get the chance, or knowing myself, I'll just forget about it in 10 minutes. So, Jem, how do you look at long-term rates
We
and
close
realized
above
volatility around these
536.
type of decisions and effects?
Yeah, I think the reason that markets don't perform, in the basic terms, during rising interest rates, is kind of manifold.
AMC,
Kind of
AMC on the 5 minute.
but first and foremost, the
It's
obvious
AMC
reason
RSI
just
is still
less
good for an
demand
attempt to
assets.
close at
with higher cost of money, people have less money to invest.
we'll say $5.60 today. That would be great, or at least attempt it. But if we close in here today, that's a good day,
There's a
man.
lot of different
Ape,
names.
of course,
people are
RSI and
throwing
Ape's going through the
out
roof because
that
we're
we need to
breaking out of a
probably
bull
normalize
flag.
that.
But this is a situation where I don't care about the RSI.
Retina,
It's going to rocket, man.
Retina, whatever you want to call it, the money's flowing to bonds. I have people calling me all the time being like, why would I invest in X or Y if I can just get 5%?
Everything I have done so far has been correct on the arbitrage.
That
I'm
goes
so
higher.
happy.
You get more and more of that.
I should have held my
risk
AMC calls
premia
through today, but that's
also
okay. I made
increases
like $800
dramatically.
now.
What do I mean by risk premia? Yeah, I mean, look, at the end of the day, there's less liquidity. Market makers, banks, etc., have less ability to absorb liquidity, which itself increases volatility. Risk premia itself, makes equities or risk assets, things further out the risk curve, more expensive relative to the risk. Never mind the more traditional kind of effects that we talk, that everybody more on a fundamental basis knows, which is discount rates, right, et cetera. There are, if you sum these all up and think about the amount of demand that's been pushed into equities all these years that's now being withdrawn, it's dramatic, right? There's this whoosh sound of all this money flowing out of equities into bonds and out of the market writ large. And I think there's this fundamental connection between volatility and the more risk premium there is, the more actual realized volatility there is, the more tail risk there is in markets as well. So I think it's important to understand that. That said, last thing I'll say about volatility, that's this kind of short term, et cetera, volatility over longer time periods in inflationary periods, because there are these everything I just mentioned are this second order effects. These are the supply demand effects, et cetera. The obvious first order effect when people think about inflation is, on a fundamental basis, if there's inflation every year, you're getting a discount in real terms to your asset value. So the value, on a valuation basis, things are cheaper. What happened with the 60s and 70s and what tends to happen during inflationary periods is stuff just gets cheaper and cheaper. Multiples come down dramatically because there's just less demand. And ultimately, that creates a put on the market. And that's when valuations, discounted cash flows,
how hard it is not to sell right now when you're up 10 grand.
I'm giving that plain analogy. I won't do it again. But a lot of people on here probably know it. But the reality is,
but I know where it's going.
The lower we get,
let's do my calculation.
The less risk there is
Am
for
I
markets,
still
the
in
more
line for
downside
a decent
volatility
arbitrage
gets
gain?
compressed. So if you're looking at long-term skew, long-term downside, the reality is out 5 years, 3 years, whatever. A lot of that is probably still, is fairly priced now that skew has come down. And kind of vol is in there. In the short term, though, you're likely to get a lot more volatility and a lot more reduction in the value and risk assets.
Average is $1.
Thank you, Jim. We'll definitely talk a bit more about volatility in a bit here, but for now, I want to touch a little bit on federal funds borrowing. So on that note, daily borrowing in federal funds seems to be on the rise kind of rapidly. For example, on January 27th, borrowing rose to 120 billion versus 113 billion during the previous session. So Bob, what consequences are faced with borrowing occurring at this 4.3% when a large number of assets are stuck at a yield much lower than that? I'm still in the game for a good
arbitrage play.
Well, I think
if AMC keeps running,
it suggests that there's some friction going on in the financial.
Now, if AMC keeps running, right? If AMC keeps moving up, APE is closing the gap, but if AMC keeps moving up little by little, then if APE catches up to it, say AMC gets to $6 and APE catches up to it at $4, then I probably won't have much of a conversion arbitrage potential. So I would sell a day before the vote because I want to see if APE actually meets AMC at the same price. So I don't want to sell it too early. So now I know my percentage gain for potential arbitrage between the price spreads, or I will know if I can go ahead and just sell at the exact time. My formula so far is correct, and I'm really, really enjoying it. And APE is just popping, baby. Popping. All right.
T-bills out there to satisfy the demand. Banks are being
if APE hits 550 and it converges, I'll just sit there and hold it until a day before arbitrage.
RRP. And so maybe what we're seeing is a little bit of a friction in that whole system where, maybe the banking system is not getting quite as many deposits or financing as they want. And so they're doing that. But it is a bit unusual. I'd be interested.
Hello?
Yeah, go ahead, Joseph. I think we might have lost Bob to a little bit of connection there at the end, but it looks like he's dropping here connection. So, Joseph, I would like to hear your thoughts here as well.
Money, they would oftentimes go into the federal funds market, which is a market where a bank borrows overnight from another. Nick, can you mute your mic?
Oh yeah, sorry about that.
So what happens now is that right now, the only lenders in the federal funds market are these government entities called federal home loan banks. And the federal home loan banks have cash, but they don't receive interest on reserves like a normal bank would. So what they do is that they try to earn a little return on their cash by lending it out to who's usually a foreign bank, basically. Now, foreign banks are under slightly different regulations, and so they feel okay borrowing from a federal home loan bank. And so what happens is that a foreign bank borrows from a federal home loan bank, takes that money and deposits it at the Fed to earn interest on reserves. And what's been happening the past few months is that the federal home loan banks have a lot of extra cash. They have a lot of extra cash because they're getting ready to make loans to commercial banks. Recently, commercial banks have been borrowing a lot from the federal home loan banks. A federal home loan bank is basically a government-sponsored agency whose entire job is to provide cheap funding to commercial banks. And since commercial banks are borrowing a lot from federal home loan banks have a lot of cash sitting idly at their account, and they put it to use by lending it in the federal funds market. So it's really more of a response to greater demand for funding by the banking sector, like Bob suggested, but more directly, demand for funding from federal home loan banks. And that's very wonky, but that's the answer.
Thank you, Joseph. So last Bear, you recently said that Fed losses are not a problem in a practical sense, and therefore the Fed's losses are the private sector's gains. Given Bob's and Joseph's comments here today, could you explain your thoughts there a bit, last Bear?
Yeah, sure. And I think it's important. I agree with what those guys said. I think it's also important to, when you're thinking about banks, to understand that there's many banks in the country outside of the JP Morgans and Wells Fargo's. And if you look at sort of the cash assets of banks split by size, cash reserves across the banking sector have come down meaningfully across the board, but exceptionally in the case of smaller banks. And so it could be a scenario here where the demand for funding from the discount window, or which people have talked about recently, or Fed funds borrowing, is driven by a specific set of institutions that aren't the large money center banks that we typically think of, but are maybe smaller banks. So to put some specifics around that, if you look at small domestically chartered commercial banks, the amount of cash held by those banks has reduced by over 50% since about a year ago. So it's about 900 billion a year ago. It's less. It's 425 billion today. And so there is, we like to think of the market as just being sort of this one uniform pool, but I think that you have to acknowledge that there's different, players that all have different positions, needs, and that policy affects those.
I need a 5.0 rate hike.
And so we could see a situation where you actually have smaller banks who maybe don't get as much of the institutional type flows through it, coming under more pressure and needing to raise funds in that manner. So I think you see deposits are going down across the banking sector as a result of QT, but the cash assets of banks really depends on which banks you're looking at. So that's my thought on that. I guess with respect to your question about sort of the Fed's losses, really that's just a point around sort of a unique aspect of the current financial system, which is that the Fed pays interest on bank reserves and also on the reverse repo facility. So as the Fed continues to tighten, that is putting more interest in the hands of those, so putting more cash in the hands of banks and money market investors, but at the same time that quantum is smaller than the effect of QT. So it dampens the impact to a degree, but it doesn't cancel it out. Conditions are still, generally speaking, shrinking.
Thank you. So now I just want to get a little bit onto the Fed's goals. So the Fed's goals of maximum employment, stable prices, moderate long-term interest rates, and their dual mandate exist to maintain a stable monetary environment. For December, unemployment came in at 3.5% and core inflation came in at 3.6%. Joey, many have recently tweeted about the negative real and nominal PCE for the month of December, but core PCE price index increased. Can you break down for us, Joey, what this means, given what people have said about rates over the last section of comments here?
Sure. I will say, so the Fed obviously focuses more on the PCE price index. That's their official target, not the CPI. And so the movements there are important, especially as they differ substantially from the movements in CPI. And so PCE reflects, for example, reflects a lot more non-housing services than CPI. So CPI is like 1/3 housing. PCE is closer to 1/6 housing. Although I would say, like, I'll caveat that by saying I think they're broadly telling the same story. And I think some of this is just the fact that CPI has run a lot hotter and that CPI measures healthcare services in a different way than PCE. But that's like a very, very wonky discussion. What I would say is, the Fed has this dual mandate, as you mentioned. They try to balance employment and inflation off the backs of interest rate and monetary policy decisions. And that's a hard job to like get right. But I also think a lot of the time the Fed isn't fully honest about what that job entails, or about the trade-offs that matter for that job. And so, like I think we all know, and I think so lots of people in the Fed know deep down that a lot of what's going on with prices doesn't reflect things that are going on in financial markets. If the price of oil is moving, that's not usually because the Fed is raising or lowering interest rates. Similar arguments for food, similar arguments for a lot of manufactured goods. So you end up with, as we discussed earlier, the Fed is like focused in on this measure of core services excluding housing, which is a very, very narrow way of looking at inflation within
I'm gonna go take
the
a little
PCE
break,
price
but I'll
index.
keep the stream going.
I think ends up throwing away
Hear
a lot of
rate hike
informative
news.
information, keeping a lot of stuff that's not informative. But like to wheel it back for a second, if I'm Jerome Powell, if I'm putting that hat on, if you're saying you want to balance employment and inflation, to me that sounds like what you really want is to manage labor income growth. You want to manage the growth rate of jobs and wages. And we've seen a big deceleration in that over the last few months, over the last, half a year, really. And so I think one thing that I'm looking for at this FOMC meeting is for Jerome Powell, either in the press conference or in the statements, to give kind of a hint that he's saying he's more comfortable with the pace of growth, and that they're comfortable with the parts of inflation that they don't control. They're saying that we have confidence that the parts that we do control are going to come down, and that we think the parts that we don't control are out of our hands and we're going to worry about them a bit less, considering they've been worrying about them a lot more recently. So that's like, if you're thinking about shifting the balance of focus, which I think is a big theme of the spaces and of like the recent Fed stuff, I think the balance of focus is definitely shifting more away from inflation, more back towards employment. Although, like we said earlier, it's still like it's still inflation's ball game until we get back to a relatively normal level. It's a very long-winded answer, but I hope it made sense.
Oh, I loved it. It looks like we've got some comments from Jem waiting. What do you got there, Jem?
Yeah, this is more orthogonal, but I wanted to address an important point here that hasn't been discussed. There's an important change afoot in the calculation of CPI. CPI, the BLS has recently updated their spending. They're updating their spending weights in the calculation of CPI from updating every 2 years to every year. And that may seem like an innocuous thing, but because of the way CPI has been, that updating is going to cause CPI to naturally decline and show more progress on inflation than is expected. And that's going to have a significant effect. People have been focused on CPI. You haven't seen many volatile moves on PCE, despite the Fed, constantly saying that's what we're looking at. And PCI has been significantly hotter, particularly on the core side, than kind of the narrative that's been put out there about CPI. And I think, again, timing wise, you look out at CPI February 14th, and you think about kind of if that number's a little soft again, which is likely to happen given these adjustments, what that will continue to do to markets, right? Into a perfect window of strength, right? When markets would perfectly front run that. I think behind that sits a very nice kind of sell the news event, right in the middle of that Wednesday of OPEX, et cetera. I'm just going to highlight that out there. I think the CPI PC thing, it's an important clue to psychology and narrative, et cetera, versus reality. And the reality is that inflation's not coming down as quickly as CPI is telling you. Yes, it is softer, it is a soft landing kind of reality. But if markets continue to run, there's a lot of other things that are also going to be very supportive of inflation that weren't the case, and the lagging data before, reopening of China being probably the biggest, right? Which is still just kind of happening because of the amount of COVID kind of spreading over the last couple of months. We saw in the U.S. what that looks like. You're going to see something similar in China here in the months ahead. The market rallying itself reflexively is supportive for inflation. SPR was, during the election where there was a massive release of oil. Now they're going to be buying it back. Dollar weakness, 10-year, has come down off its highs. There's a lot of things out there that were really, really kind of, problems that are actually, if anything, going to stiffen inflation as we move forward. So I'd be very hesitant looking at CPI and saying, okay, all is well at this point. I think in the short term, the market will front run this, but I think there's a selling opportunity that lies ahead on the back end of a short-term rally.
Thank you, Jem. Now, to kind of move on here while we wait on the FOMC release to come out here in about recently, Governor Waller mentioned two modifications to the Fed's QT framework, and that he is, quote, open to maintaining QT even if policy rates are cut. To your article, Come Hell or High Water, can you explain a bit what this means through the problems of prolonged QT plus cutting policy rates? And then we can get the panel's opinion on what this means and changes, if any.
0.50. I want this to end.
Sure. So the Fed has been doing QT, and what QT does is that it withdraws liquidity out of the financial system, and it also increases the supply of treasuries into the market. And a couple constraints the Fed had in running QT was making sure that as they withdrew liquidity out of the financial system, the banking system would have enough liquidity to function. And by the Fed's own calculation, the banking system needs maybe $2.5 trillion worth of liquidity. The problem occurs when the Fed is draining liquidity, it doesn't actually have control of where the liquidity comes out of. Now, it could come out of the banking sector, or it could come out of the reverse repo facility. But as we've seen, the reverse repo facility has been stuck at a very high level. So all the liquidity drains so far have come out of the banking sector. Now, that's a problem for the Fed because, like I mentioned, they want to make sure the banking system maintains liquidity above a certain threshold. Now, Governor Waller came out recently, and he suggests that when he looks at banking sector liquidity, he adds the RP into it. And so that totally changes the game, because if you're looking at banking sector liquidity, then QT could only run a few more months unless the RP started liquidity in the RP started declining. But when you add the RP to the banking sector, you get a QT runway of about 3 years. The second big constraint about QT was that the Fed has a kind of a religious belief that whatever the policy rate does, the balance sheet rate has to do the same thing. So that means that they only do QE when they're in rate cutting mode, and they only do QT when they're in rate hiking mode. Now, the market is pricing in rate cuts later in the year, and according to this dogma, that would also suggest that the Fed would be ending QT later in the year too, because it wouldn't make sense traditionally for the Fed to both be cutting rates, so increasing accommodation using their policy rate, and yet still tightening accommodation by conducting QT. But Governor Waller is suggesting that he is A-OK with the Fed both cutting rates and maintaining QT. And I think that has a pretty big impact on asset prices. Now, the Fed's current QT pace, in practice, they're probably doing, let's say, $800 billion a year. And that's a lot of duration that's applied in the market. So over the next 3 years, you're going to have, a large supply of longer dated fixed income securities as the Treasury issues new issues to repay the Fed. That suggests to me that rates will go higher, and it would logically be a headwind for a lot of risky assets as well. But we'll see if Chair Powell has any more commentary on this at his press conference, because when I heard Waller speak, that seemed to me as something pretty new. So I think people will ask about that today.
Beautiful. Thank you as always, Joseph. Now, does anyone else on the panel want to comment on what Joseph said? For reference, on our last space for CPI, we discussed the Fed's QT dilemma of wanting to aggressively shrink the balance sheet and keep banking sector reserves above a minimum level. That requires QT to drain the RRP, which really doesn't appear to be happening. Instead, it seems that QT has drained and continues to drain liquidity from the banking sector. Maybe last, Bear, given your extensive writing on this, could you kind of touch on this a little bit? And we'll also have the announcement in about 3 minutes here, so maybe quiet a while we read things as they come out to the folks listening.
Yeah, sure. I think it's absolutely an important statement that was made with respect to how the Fed is viewing QT and the sources for sort of supplying that QT from the banking sector as well as the reverse repo facility. And I think that the Fed absolutely wants to shrink its balance sheet, and to the extent that it can do that while also using rates to influence the economy in the way that it desires, I think that would be an ideal scenario. So I understand why the Fed sort of wants to view it that way. I think that the potential problem could come with, how that sort of works in practice, and whether, by making a decision that we're just going to basically continue to tighten, liquidity, and it'll work its way through the system in whatever way the system wants to work it, could cause problems to the extent that that the reverse repo continues not to drain, and it comes from banks instead. So you could have a situation where the Fed says, hey, we're going ahead with QT, but unless that money comes out of the reverse repo, it's going to come out of banks. And as we sort of touched on earlier, there's already at least some sort of pressure on banks funding people borrowing in different markets in a way that's atypical, given what people think about the level of liquidity in the system. And so you really could have a situation where they think that they're going to achieve this goal and going to drain the repo, but in reality, they could push banks to the edge of their sort of minimum required reserves, where you could have market disruption as a result. And at that point, it becomes the Fed, up to the Fed whether they're okay with the sort of the volatility, sort of letting the market handle it. If there was something like sort of these key funding markets like the repo market or whatever having some turbulence, whether they're okay with that or whether they will step in that situation. So I think that it really comes down to how this happens in practice, and it's not necessarily going to be a smooth road to the extent that that's sort of the plan that they're taking.
All right. Seems like we've got the report now. Looks like they are indeed doing the 25 bips. So let's take just a moment here to digest the numbers a bit. For those of you listening, we will be streaming the presser that will come in about half an hour here. And for those of you who are interested in watching the video,
Okay, 25. I guess that's what it is. Let's see how the market reacts or if everything was already priced in. Interesting. They said 25 bips. So I am going to get ready to sign off. You guys got it today. Thanks for coming to the stream. Please like and subscribe. I'm way up on my ape. I hope you guys are too. We've been following this real close and we've been right all along so far. So this is great. I think AMC is going to keep creeping. We're going to see, I'm going to buy some calls here in a little bit, but we got some AMC potentially trying to gain, if we get to 560 and hold support, if we test 560 again and we can get above and hold support, which this looks like it's a cup and handle to me, personally, there's a little cup and handle-ish business going on there. 560 to hold support, if that happens, right? Let's say 560, okay? If that happens, we gain support there, then we have a potential to regain $6. That would be phenomenal. If we regain $6, my, 590, we'll just say 590. If we can pull that, that's going to be phenomenal for the arbitrage opportunity. And if they chance getting back to $6.50, $7, my God, I'm going to make so much money. And I hope you guys too, man. So y'all have a great day. Please like, sub, share the video. I appreciate you guys so much. Take care. Froggy Stonks out.